on whether to elect Jim Jordan as its next speaker. Bloomberg Government Congress reporter Jack Fitzpatrick has more on what to expect from round 3.
There is now discussion about who comes next or what comes next. There's the option of using a resolution to give the acting Speaker Pro Tem, Patrick McHenry, more authority to allow legislation on the floor. So there is a possibility that some legislating can be done even without a clear answer on the Speaker.
Bloomberg Government's Jack Fitzpatrick reports several other Republicans are floating their names as candidates if Jordan does go down in today's third round. Former Trump lawyer Sidney Powell has pleaded guilty to 6 misdemeanor conspiracy charges in the election interference case in Georgia, and she's agreed to cooperate fully with prosecutors. This as Donald Trump is leading President Biden in head-to-head races in 5 of the 7 swing states. A Bloomberg News and Morning Consult poll shows Biden trailing Trump on the economy and foreign policy. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages, they're lower. 7 of the 11 major industry groups in the S&P 500. Right now they're down. Consumer discretionary, the biggest drag, and that is where you're going to find shares of Tesla. They're down 9% after their disappointing earnings report. Applications for unemployment benefits dropping to the lowest level since January. The labor market just keeps powering ahead. The U.S. economy can't stay resilient forever, at least according to Seema Shah. She's at Principal Global Investors.
We are expecting a slowdown. It is definitely not showing any signs of coming through at this stage. I think that's what really bond yields are responding to at this point. But of course, the further that yields rise, the greater the chance that a slowdown is going to be even deeper.
The 30-year, the long bond, right now just under 5, 4.99. In fact, the 10-year is at 4.92. The 2-year is down 1 basis points. That's at 5.20. As for the major stock indexes, the Dow Jones Industrial Average up just 1 point. The S&P 500 down 1 point. The NASDAQ 100 up 10 points. YouTube developing a tool powered by artificial intelligence. It's going to let creators record audio using the voices of famous musicians. So Bloomberg's learned the video site has approached music companies about obtaining the rights to songs it could use to train the AI tool.
That's going to end.
I'm not sure how the famous musicians would feel about that. Unless, of course, they're dead, then they really might not have a say.
But then there are states. I mean, the musicians are getting so much money for their catalogs these days. It's been such, amazing.
Yeah, a ton of them selling out to private equity. And, names.
I think it's good. I think it's a good idea to sell now because I don't know what's going to happen with all this AI kind of stuff. I kind of feel like it's going to get worse before it gets better for those folks. So.
But will those catalogs then be worth more when all music is just AI slop and you don't have, the genius of Michael McDonald and Kenny Loggins together?
Wow, pulling that reference out of nowhere. I probably would have gone somewhere else.
Early 70s reference, I believe.
Early 70s.
You know that song, This Is It?
Yep.
Kenny Loggins wrote that when his dad was dying of terminal cancer. And he got together with Michael McDonald and they just put together a slapper, like an absolute hit.
Very good.
Wow.
There we go, John. I wasn't going to go down that area, but
didn't think we'd go down that road.
It happens. It happens.
We're not in love anymore.
No, there's no singing on the program.
Yeah, no singing on Bloomberg Radio. Thanks very much, John Tucker. We appreciate that. It's Thursday, Matt, so that means we talked to one B. Ritholtz.
Oh, yeah,
the big host
picture.
Of Masters in Business. He's Chairman and Chief Investment Officer, Ritholtz Wealth Management. I'll let you run with this, Matt. I don't know where you want to go.
I love his blog, The Big Picture, which you can see on the web at ritholtz.com. By the way, kicking off, there's a banner ad, Barry, for V8, and I'm here to tell you, it is loud and terrifying, and I'm loving every minute of it. I had no idea, Barry, you still have to crank the steering wheel like 3 or 4 rotations before the tires find out about it on a Jeep.
Yeah, I don't think they changed a whole lot there. They just dropped a big engine and off to the races. It's that seems to be a successful formula, especially for American automakers.
I wish somebody would tell the people at Ford because, they won't make a Bronco that has anything bigger than a V6 in it. And this 392, expensive as it is, and I'll get to that, but it's electrifying in its
no pun intended.
Exactly, in its analog nature. Like, it's such a great fun piece of gear to drive. In fact, I wish you were here because I would give you the keys and we'd take it out right now. It's so you have a Jeep, right?
I have a 2013 Rubicon, which I use basically. That's my post-apocalypse vehicle because it's just a hamster wheel inside and it goes everywhere. It's pretty much and anywhere. It's kind of unstoppable. That's the appeal of those old analog CJs, are that they're just great fun cars.
So, but I need to go to the inflation picture with.
That's exactly what I wanted to do.
Well, let's go,
yes.
Because I can't get in the seat behind the wheel of almost anything that you'd want to.
Well, I'll tell you
the numbers that you're quoting
exactly.
here, $90,000.
So you know what, Hannah Elliott from Bloomberg Pursuits, she drove the same car that I'm driving now 2 years ago, the Jeep Wrangler Rubicon 392. And back then she was like, awesome car, but unbelievably expensive because they wanted $74,000 for it to start, right?
And
that was 2021. Fast forward 2 years. The base price, $92,500. It's gone up more than 23%. And to me, this ties into the political story we have on the Bloomberg today, the fact that Donald Trump is leading President Biden in several key swing states because America just has had it up to here with this inflation.
Yeah, so first of all, I'm skeptical of all of these surveys generally. We've spoken about this in the past, not just political surveys a year and change before the election that are notoriously unreliable, but generally speaking, when you ask people, hey, how much are you going to spend on Christmas? What do you think is happening with inflation? What is the state of the economy? I kind of blame the American education system and the emphasis on testing. Nobody is willing to say, how the hell do I know where inflation is going to be a year from now? Instead, hey, there's no penalties for taking a guess, and so they take a guess. So we end up with these surveys that are rarely accurate and very often tremendously misleading. Just a perfect example, a recent survey on inflation said, how's inflation? And something like 2/3 of the respondents said inflation is going up the past quarter. Hey, the past year. From the past year, inflation fell from 9% down to 3%. So
well, that's because they look at the cumulative. It doesn't matter if inflation
so
drops
in other words,
to zero.
they don't know how to
we talk
answer a
about
basic
this.
question.
We see the data day in and day out, but your average American doesn't care. If inflation
So
drops
why
to
are
zero
we
now,
asking
it's
them?
still gone up by so much. No, what I'm getting at is
prices are
the
going up.
economic sentiment, right? How Biden can be behind 5.4% economic growth in Q3, but the fact that prices have gone up by so much is what everyone cares about. And it doesn't matter if the Fed stops it; they've got to somehow bring it back down to where it was, right? If they want to average 2%, this is what Neil Grossman goes on about all the time.
Right.
If they want to average 2%, they've got to hold it there for like the next 4 decades.
I disagree with that assessment, and I'll tell you why. So we've talked about labor shortage and how wages are going up. We've talked about housing prices and how those have gone up, and now we're talking about automobiles. All three of these higher priced entities are not rising in price because the monetary circumstances are too loose. They're rising in price because we have shortages. We didn't build enough houses for 15 years following the financial
Well, what about
crisis.
fiscal spending, dude? Is that not inflationary?
So that's exactly where I was going.
Yeah.
The primary driver of the 21-22 inflationary surge was a massive increase in fiscal stimulus, starting with CARES Act 1. Hey, it was 10% of GDP. That's a number we haven't seen since the Great Depression. Arguably, it was the greatest fiscal stimulus in American history relative to GDP, but it was CARES Act 1, it was CARES Act 2. Behind that was the Tax Cuts and Job Act, which was about $3 trillion over 10 years. Then you have the CHIPS Act, and you have the infrastructure bill under this president, and CARES Act 3 under this president. So the combination of Trump and Biden.
The Inflation Reduction Act, by the way, what an ironic name.
Also, right, it's also a ton of money. Now, some of these are spread out over 10 years. The Infrastructure Act, the CHIPS Act, the Tax Cuts and Jobs Act are spread out over a decade. So it's not 5% this year, it's 0.5% a year for 10 years. But here's the fascinating thing, and this is what I'm so intrigued by. When we
Just got
ask
20
people,
seconds, Barry. 20 seconds.
Where is sentiment? I just don't find sentiment. I just don't find the economy worse than the financial crisis, the dot-com implosion, or the 87 crash. And that's what people are saying it is.
All right, Barry, thanks so much for joining us. We've covered a lot there, everything from GDP to the Jeep Rubicon with the 6-point-something, I don't know, displaced engine. Barry Ritholtz, host of Masters in Business, Chairman and Chief Investment Officer, Ritholtz Wealth Management, joining us here. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Steve Rappaport.
Paul, shares of Netflix are soaring, up more than 16% this hour. The company's boosted by strong growth in the third quarter. Let's get more from Bloomberg's Abigail Doolittle.
At the open, up 18% at that point, the best day since October of 2016. So a big reward here for these results. And what investors are really honing in on is the big subscriber add. 8.76 million subscribers were added in the third quarter, blowing out analyst estimates. And it's also one of the best quarters for subscriber adds in years. Now, why it is so important, it puts them on track to add 20 million subscribers this year. When you compare that to 9 million in 2022, well, it's more than a doubling. It shows that their password crackdown is working, and they're also saying that their strong content is really helping out the results.
Thanks, Abigail. Netflix says it plans to raise prices for certain customers in the U.S., U.K., and France. More job cuts at Ford as the UAW strike drags on, Bloomberg's Scott Carr reports.
Ford says it's laying off another 150 workers in Michigan because of the ongoing UAW strike. That brings the company's total of workers furloughed to 2,730. Ford says the UAW's walkout last week at its Kentucky truck plant prompted the new layoffs at a Michigan axle plant. The targeted strike against Ford, General Motors, and Chrysler parent Stellantis began September 15th. Scott Carr, Bloomberg Radio.
Thanks, Scott. And Delta is rolling back some of the changes to its Sky Miles program that led to a flood of customer complaints. The airline initially raised requirements for travelers to reach various status levels. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets right here, S&P 500 pretty much unched on the day. Nothing happened in there. Same for the Dow. NASDAQ up just a smidge here. So the indexes are not really doing much movement here. Looking at the yield curve, the 10-year Treasury just up about 2 basis points, 4.93%. It's taking a little bit of a breather there on that rate march higher in rates. WTI crude oil, it's pretty much steady today, $88.30 a barrel for WTI crude. And gold up just about 0.5%, $1,956 per ounce for the gold stuff. Right now, let's head down to Washington, D.C. Amy Morris has got World and National News for us.
Thank you, Paul. Sidney Powell is the former Trump lawyer who's one of his 18 co-defendants in the Georgia election interference trial. Well, she's pleaded guilty to 6 misdemeanor charges.
Do you understand that by pleading guilty, you are giving up the right to a trial by jury?
Yes.
Do you understand that by pleading guilty, you're giving up the right to remain silent and not to incriminate yourself?
Yes.
Sidney Powell also agreed to cooperate fully with prosecutors. That deal came just a day before her trial was set to start. Representative Jim Jordan, the Republican nominee for House Speaker, now plans to steer clear of pushing for a third round of voting, at least for now. Instead, he will back Representative Patrick McHenry to stay in that post as temporary Speaker until January. Bloomberg congressional reporter Billy Howe says McHenry may have some of the same issues that Kevin McCarthy had.
Running the U.S. House with a temporary leader, they can probably do the things that they could always have done. But the question is, would he still be under the constraints about not dealing or working in bipartisan fashion that his predecessor was?
Bloomberg congressional reporter Billy Howe says Congress has a lot to do before another possible government shutdown in about 4 weeks. Undocumented immigrants are allowed to live in the United States for years while their cases play out in the court system. A plan to give judges more independence to deal with the backlog is being opposed by Republicans who feel the focus should be more on border security.
Millions of people in line waiting for a hearing in an immigration court, clogging the courts when only 15, maybe 20% can qualify.
Senator John Cornyn of Texas wants to stop the ballooning backlog by forcing migrants to apply for asylum in Mexico first. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg, Paul and Matt.
All right, Amy Morris, thank you so much. We appreciate it. All right, coming up in the next hour, we're going big-time Federal Reserve. In the hour, we're going to have Jay Powell. He's going to deliver some comments at the Economic Club of New York, which I am not a member, Matt.
You could join.
Can I?
I think you can. Yeah, it's not like joining the racket club. I mean,
of course, no, of course. And then at 12:15, David Weston, Bloomberg Television, is going to interview Fed Chair Jay Powell. So we're going to get a lot of Fed Chair Jay Powell in the next hour. We'll bring that to you. It's going to be simulcast with TV. Matt, we talk a lot about private credit, how that is just exploding as an asset class after the great financial crisis, and a lot of that lending came out of the traditional banking system into the private lending. My big issue I've always raised is, do we have some regulatory risk here? Like, what happens when some of these loans start blowing up and, all that kind of stuff? Now, I see a story in a Bloomberg terminal here. Private credit managers seek retail investors in Beverly Hills. They're trying to get individuals cash. It's heating up amongst some of these direct lenders, and they had a big industry conference in Beverly Hills this week, and that was one of the big issues, which kind of brings my concern to the forefront. When you get retail investors in there, that's when you feel like the regulators might need a little bit of oversight here to make sure some of these retail folks, are protected here. I'm just interested to see how this plays out over the coming, really, years for this private credit business.
Yeah, totally agree. And I think a lot of people are looking at this. So, there could be some risk, and regulators, I'm sure, have taken note because we talk about it every day. But, of course, they're looking in Beverly Hills because
that's where the money is.
People are very rich there, right? So they're not retail investors. Like, it's not like they're after my mom in Ohio, right? They're after people who are earning more than $200,000 or $1,000 or $300,000 or whatever makes you a qualified investor now, and have serious assets, so that you have enough of a padding that if you lose it, you won't be underwater.
Private credit, $1.5 trillion market today, forecast by Preqin to go to $2.3 trillion by 2027. Private credit, that's where the money is. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we are going all in on Fed speaker around 12:05. Wall Street time, Fed Chair Jay Powell is going to make a speech to the New York Economic Club, about 10 minutes or so. And then immediately following that, Mr. Powell will sit down with Bloomberg's David Weston for a fireside chat for the remainder of the hour. So if you want to get a real handle on what the Fed's thinking, stick with us for the next hour. But right now, let's kick this thing off with a quick data check here. Denise Pellegrini joins us here in New York.
Yeah, we check the markets for you all day long here at Bloomberg. It's 12:01 on Wall Street. Stocks right now have been careening between the green and the red. Right now, we land on the green. The Fed, of course, a lot of interest there on what happens later this month. They have that FOMC meeting. It wraps up November 1st. Steve Rasciuto, chief U.S. economist over at Mizuho America, says the Fed should hike rates again next month, but probably won't.
If they don't want to do it, they should do it, and that's a mistake if they don't do it. But they're probably not going to do it, and they're going to make that mistake.
Mistake. And Rasciuto with us there on the Bloomberg Surveillance Podcast. Weekly jobless claims at the lowest since January. Leading indicators falling more than expected. Sales of previously owned homes plunging. The Dow right now, though, it's higher up by 0.2%. The S&P 500 up 0.2%. The NASDAQ up just about 0.3%. Now, yield on the 10-year, 4.9%. Spot gold, NYMEX crude, they are both higher. Netflix surging and Tesla lower after Elon Musk dialed back expectations on the EV maker. And that is your Bloomberg Business Flash, guys.
All right, Denise Pellegrini, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. So we got some headlines out, I guess, from the speech.
Exactly. So the text of Powell's speech has already come out, and he is going to say that the U.S. Central Bank is proceeding carefully as it considers the path of policy and is prepared to raise interest rates again if policymakers see further signs of resilient economic growth. So nothing really to write home about there. He says, this is a quote from the speech, "Given the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive." That's key. How long it's going to be, higher for longer. How long is that? How long policy is going to remain restrictive based on the totality of the incoming data. So they're still data dependent, the evolving outlook, and the balance of risks. One of the things that a lot of Fed speakers have been talking about is long-term rates are coming up. That's one of those risks, you know, and that is helping the Fed to do its job in a sense, to hold, you'd expect, back the economy and bring down the inflation, although the economy is just running hot.
And you've seen that in the rates. I mean, we've seen this big move up in rates. Again, the 2-year 5.17%. Now we got the 30 year. We were at 5.06% earlier today. We're right around 4.98%. But rates are higher. They're higher for longer. And the question, I guess, a lot of people are saying is, how long and what damage, if any, does that do to the economy if I can't go out and buy a house because the mortgage rate's 8%. I don't want to pay 8%. How about credit card debt and all those types of things? So there's definitely some concerns about what higher for longer means. But again, you look at the employment data, Matt, and that's the one that probably is just the most surprising to me, how strong the labor market is.
Yeah, absolutely. I mean, incredible strength. And the housing point that you make is one that I think the Fed is to some extent grappling with, right?
Yep.
Although Claudia Sahm addressed this this morning, talking to Lisa Abramowitz and Tom Keene on Bloomberg Surveillance, and kind of reminded us, look, the housing market has been ground to a halt, right? It's very bad for people who want to buy homes right now. But it was very good for a long time.
Yep.
And many millions of people refinanced at, much closer to zero, a much closer to zero rate, at 2% and change, at 3% and change. So In a sense, that kind of the problems we're having now, the tightness we're having now, is kind of balanced by the easiness we had for so long.
Yep, and then so it'd be interesting to see, because you mentioned we were just talking about automobiles with Barry Ritholtz, and then the price tag there for a lot of people. Again, people they have to have their automobiles.
And financing. It's not just the price, right? Yeah. Most people don't go and buy a new car cash. You're financing that, and if you're lucky right now, you're going to get a rate of like 7%,
right?
6%. It could be 8, 9, or more, double digits. So, but that's essentially what they want to do, right? They're trying to slow down this economy. The problem is, when you look at the jobless claims, Denise Pellegrini was just saying, the lowest level since January. And a reminder, it's October.
Yep.
That was a long time ago. The Atlanta Now GDP forecast was for 5.4% in Q3.
Yeah, that does not sound like a recession to me.
Not an economy that's slowing down.
But we've been talking about a recession for well more than 12 months now. I guess there's always a recession around the corner, but this is a pretty big corner here. So we're looking at a live feed of the economic
It looks like Tom Keene's dad. From
the glasses,
from the days of old. He's got the same mascot glasses.
But apparently there's a little
or whatever
protest.
it is. That's Bob Steele.
Okay.
Right there at the podium, and at the
a protest there.
Economic Club of New York, the lights have been turned out.
Yeah. So interesting to see what's happening there. But they're supposed to have a speech from Fed Chairman Jay Powell at 5 minutes after the hour. Then there's some reporting there that there was some perhaps a disturbance there. So we've kind of the video feed. They've kind of taken away the live video feed. So we'll just kind of wait to see if they get their ducks in a row. Market turning a smidge higher, just about 0.2% higher on the S&P 500. So we'll keep an eye on those markets. But the issue for today for the markets has just been one of earnings. You had Tesla with the disappointing numbers, and that stock trading down 6, 7, 8%. But then Netflix come out with some really strong numbers, and that stock's up, 12, 13, 14%.
By the way, you can kind of tie these protests together with all of the big threads. So with inflation, with the unrest in the Middle East, with monetary policy, because apparently the protests have something to do with fossil fuels.
Oh boy!
And we have seen oil, float higher in terms of the average range right now. NYMEX crude is trading at $88.54 a barrel. Brent crude, the global benchmark, trading at $91.55 a barrel. And we have heard over the last couple of days that there's a $5 risk premium in there, but that could grow.
Yep. All right, let's break down some of those Netflix numbers and kind of what we're seeing in the media space. Mark Douglas from Mountain joins us. Mark, boy, we talk about the streaming business, and this quarter really suggested that it's Netflix's business and everybody else is just trying to figure it out here. What did you make of Netflix's results, and then maybe the not so good stuff coming out of the other media companies?
Yeah, so the way I think about that is Netflix, I think the initiatives they launched, like kind of cracking down on password sharing or kind of discouraging password sharing, I think that has created a backlog of user adoption and as a result revenue that they have total control over and can play out at whatever rate they need to. And so they did very well last quarter. They did just as well, if not better, this quarter. And I think you're going to see that for quite a while. The question is whether analysts are going to start to price that in. If they don't, every quarter you're likely to see upside just by, the analysts under forecasting the effect of that. And I think that's what is really exploiting Netflix's numbers. And at the same time, they've gotten a really good handle on expenses to also do it profitably. And I think no one else has that. As a matter of fact, Netflix got criticized for that for years as to why do you allow so much password sharing? And it's turning out to be just a huge boom to the business in the near term.
And you've been right on this for at least the last couple of years, Mark. You've been saying this. We talked to you because you have the inside track in terms of the advertising picture and media out on the West Coast. Mountain has been a business has been growing that business for as many years as we've been talking to you. Does Netflix, now that they get into advertising, can they be a leader in that space as well?
think they can, but I don't think they yet are. And part of that is I think they have a big decision to make. Are you going to build an advertising business like Meta, or are you going to build an advertising business like Disney? And in the Disney one, which is, kind of big brand advertisers with huge budgets, there's no growth in that market. So you, Netflix, are coming into this brand advertising TV market. You want growth, but the market is not growing. So so now you can only take market share, and that's not easy. And I think you're seeing that play out, that this is turning out in the first year not really to be that easy. The alternative is not easier, but you don't face the competition, which is we build a big performance business. We're not reliant on 1,000 big brands, and we try to build a broad-based ad business across many size companies, small, mid, large, and a lasting business that in theory could be just as big as the current Netflix business. They have not figured that out. The good news is that because this backlog of revenue, it is buying them time to figure it out. So they're not totally dependent on building the ad business in record time in order to grow Netflix. And so, it's created a comfortable business, but people are going to eventually hold them accountable and expect to see like ads be a big revenue stream for them.
Are you surprised, Mark, that maybe some of the other traditional media players like Disney, like Paramount, like Discovery, haven't done better in closing the competitive gap, the profitability gap with Netflix?
Well, I think the challenge they have, or another way to state it is the advantage they have. I'll talk about my own personal habits, viewing habits, and I think it's a lot of people's habits. When I turn on my TV, the first app I click on is Netflix and see what they have to watch. And it's just a huge advantage. It's muscle memory for television viewing. And it's just really hard for anyone to catch up to that. But everyone else, it has to be, well, do they have a show I'm really interested in right now and that I'm binging or I'm watching every week? But Netflix they are the TV guide almost, except the TV guide is all of their content. And that is just an incredible advantage that they built up with first mover advantage, and then a huge investment in content that they originally made and continue to make. And I think for others, they're going to have to consolidate to catch up to that. And Netflix doesn't have to consolidate because the muscle memory is there. That's where people go when they turn on their TV.
I've been kind of sucked into one of the shows, Black AF, right now.
Oh, yeah.
And I can't stop watching that, but when I do, I'm going to go to The Fall of Usher. They really have like a constant lineup of shows. The stock, Mark, has never come back to, or hasn't come back yet to, the 2021 highs. They took off during the pandemic. Is that just a blip, or do you think they can ever make it back to that level? Especially if they're beating out all their other competitors, it would make sense.
Yeah, the stock market as a whole, to some extent, hasn't really come back to those highs. So, if the stock market recovers and they continue to do well, I think their stock will do well with it. As to whether they can outpace the market, I honestly, I rarely say this, but I'll leave that to financial analysts.
Okay. All right, Mark. Thank you so much, Mark Douglas. We appreciate that from Mountain. What we're doing here is we were supposed to be having a speech by Fed Chairman Jay Powell at the Economic Club of New York, but climate protesters interrupted Powell's introduction at that speech. Fed Chairman Jay Powell has been escorted out of the room as protesters interrupt the speech. So we have a live feed of the room. They've turned off the lights or dimmed the lights. I think they're trying to deal with these protesters and then decide when and how to proceed. So we are waiting on that. In the interim, we're joined by Molly Smith. She covers the economy for Bloomberg News here. And I guess one of the key issues we wanted to hear from Fed Chairman Powell today, Molly, is just kind of how the Fed views this economy. We get strong labor numbers seemingly every week. We get the Atlanta Fed saying that GDP is going to be 5.4% here in the third quarter. Yet there's a lot of concern out there about continued high inflation and higher rates as well.
Yeah, it's a lot for them to juggle right now, and I'm sure we're all very anxiously awaiting for when the stage will be cleared and Powell can get back out there. From the people that we have at the event right now, it sounds like the protesters, some of them were forcefully taken off the stage, and all that we can discernibly make out that they're saying is end fossil finance, and directing that directly at Jay, that Powell's been removed from the room. So that's
he's back. He's back and sitting. I just saw him sit down next to the.
Okay.
Is it a dais or DS? What do you call it?
Dais.
Whatever.
All right.
He's sitting down next to the podium. Bob Steele is standing up. They've turned the lights back on. Jerome Powell is now approaching the podium, and we see a round of applause and a shake of the hand. Let's listen in to Fed Chair Jerome Powell.
Thank you to everyone for being here today. It's great to be back at the Economic Club of New York, where I last visited before COVID. So before our discussion, I'll take a few minutes to discuss recent economic data and the outlook for monetary policy. Incoming data over recent months show ongoing progress toward both of our dual mandate goals, maximum employment and stable prices. And I'll start with inflation. By the time we raised rates in March of 2022, it was clear that restoring price stability would require both the unwinding of pandemic-related distortions to supply and demand, and also restrictive monetary policy to cool strong demand and give supply time to catch up. These forces are now working together to bring inflation down. After peaking at 7.1% in June 2022, 12-month headline PCE inflation is estimated at 3.5% through September. Core PCE inflation, which omits the volatile food and energy components, provides a better indicator of where inflation is heading. And 12-month core PCE inflation peaked at 5.6% in February 2022 and is estimated at 3.7% through September. So clear progress there. Inflation readings turned lower over the summer, a very favorable development. The September inflation data continued that downward trend, but were somewhat less encouraging. And shorter-term measures of core inflation over the most recent 3 and 6 months are now running below 3%. But these shorter-term measures are often volatile. And in any case, inflation is still too high, and a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. We cannot yet know how long these lower readings will persist or where inflation will settle over coming quarters. While the path is likely to be bumpy and to take some time, my colleagues and I are united in our commitment to bring down inflation sustainably to 2%. In the labor market, strong job creation has met a welcome increase in the supply of workers, due both to higher participation and to a rebound of immigration to pre-pandemic levels. Many indicators suggest that while conditions remain tight, the labor market is gradually cooling. Job openings have moved down well below their highs and are now only modestly above pre-pandemic levels. Quits are back to pre-pandemic levels as well, and the same is true of the wage premium earned by those who change jobs. Surveys of workers and employers show a return to pre-pandemic levels of tightness, and indicators of wage growth show a gradual decline toward levels that would be consistent with 2% inflation over time. To date, declining inflation has not come at the cost of meaningfully higher unemployment, a highly welcome development, but also a historically unusual one. Healing of supply chains, in conjunction with the rebalancing of demand and supply in the labor market, has allowed disinflation without substantially weaker economic activity. Indeed, economic growth has consistently surprised to the upside this year, as most recently seen in the strong retail sales data released earlier this week. Forecasters generally expect GDP to come in very strong for the third quarter before cooling off in the fourth quarter and next year. Still, the record suggests that a sustainable return to our 2% inflation goal is likely to require a period of below-trend growth and some further softening in labor market conditions. Geopolitical tensions are highly elevated and pose important risks to global economic activity. Of course, our institutional role at the Fed is to monitor these developments for their economic implications, which remain highly uncertain. But I will also say, speaking for myself personally, I found the attack on Israel horrifying, as is the prospect for more loss of innocent lives. Turning to monetary policy, the FOMC has tightened policy substantially over the past 18 months, increasing the federal funds rate by 525 basis points at a historically fast pace and decreasing our securities holdings by roughly $1 trillion. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation. Given the fast pace of the tightening, there may still be meaningful tightening in the pipeline. My colleagues and I are committed to achieving a stance of policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Additional evidence of persistently above trend growth, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of policy. Along with many other factors, actual and expected changes in the stance of monetary policy affect broader financial conditions, which in turn affect economic activity, employment, and inflation. Financial conditions have tightened significantly in recent months, and longer-term bond yields have been an important driving factor in this tightening. We remain attentive to these developments because persistent changes in financial conditions can have implications for the path of monetary policy. My colleagues and I remain resolute in our commitment to returning inflation to 2% over time. A range of uncertainties, both old ones and new ones, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little. Doing too little could allow above-target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy. Given the uncertainties and risks, and given how far we've come, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. Thank you. I look forward to our conversation, David.
All right, that was Fed Chairman Jay Powell making comments, a little delayed comments at the Economic Club of New York about his view of the economy and interest rates. And now we're going to go back to, he's going to be sitting down with a fireside chat with David Weston.
Precious time, given everything that's going on in the world and in the economy. There's a lot to talk about, a lot to discuss. Let me start with something you just referred to, which is the surprise to the upside in the economic data, despite, as you termed it, I think, historically fast pace of growth. Are you surprised at how resilient the United States economy is? Just today, we got jobless claims numbers, surprised because they were low. We got the retail sales numbers you mentioned. We got industrial production. Across the board, it seems like a very strong economy, despite all you've done to try to slow it down.
Yes, so we certainly have a very resilient economy on our hands. We've got the economy growing strongly. If you think back a year, many forecasts called for the U.S. economy to be in recession this year. Not only has that not happened, growth is now running for this year above its longer run trend. So that's been a surprise, driven largely by consumer spending, driven by a very strong job market with people getting jobs with first high nominal wages, and then as inflation has come down, real wages, which is spurring spending. And we've also had inflation coming down. So, you know, it really is a story of much stronger demand. There may be some ways in which the economy is less affected by interest rates. It's hard to know precisely, but for example, many companies, any company with bond market access will have termed out its debt, right? And therefore may not be feeling the effects of higher rates. The same may be true of homeowners who have a long-term fixed rate, low rate mortgage, who then are therefore not, because it's not an adjustable rate or a higher rate, they're not feeling that increase in rates. So the economy may be somewhat less susceptible to the effects of rate increases. On the other hand, if you look at interest-sensitive spending, these are very much the the places where we expect to see and do see effects. So, for example, in housing or the housing sector has been very affected by higher rates as purchases of durable goods. If you look at surveys, people will not say that it's a good time to buy a car or a house. Quite the contrary. So we see policy working through its usual channels. It may just be that rates haven't been high enough for long enough, and again, it's all happening in a context of very strong demand.
We've heard other people speculate maybe the terming out of debt, as you say, both corporate debt and household debt, may diminish the effectiveness of rate hikes. Do you have a view on whether that's true? And if it is true, what does it say about monetary policy? Does it mean you have to go farther in the rate hikes, or do you just not have the power to affect it?
So no, I don't think that there's a fundamental shift in the way that interest rates affect the economy. There may be some differences in this cycle because of what I mentioned. As I mentioned, we are seeing the effects where we expect to see them, which is interest-sensitive spending and also asset prices to some extent, and the exchange rate, which you're also seeing a strong exchange rate, which is disinflationary. So I don't think there's a fundamental change in the way monetary policy affects the economy. And again, it goes back to just very strong demand. We take the economy as it is. We take fiscal policy and the economy and all the things we don't control. They come to us, and we conduct policy always to achieve maximum employment and stable prices. So we just take what comes. The fact that we have a strong growing economy, a strong growing labor market, and inflation coming down, these are the elements that we want to see to achieve the outcome we want. It may take more time, but ultimately, this is the kind of thing you would want to see along the path to getting through this without a big increase in unemployment.
How much effect thus far has the Fed had? We all have memorized now long and variable lags. How long and how variable, and where are you in that process? Are you at the 25% point, the 50% in terms of seeing it in the effect in the real economy?
So there's no precision in in our understanding of how long lags are. One thing that has changed in the modern era is that markets now, over the course of the last 30 years, central banks have decided, instead of being secretive, to be very transparent. And what that has meant is that markets move actually well in anticipation, well before our policy moves. So the transmission from policy moves to financial conditions actually happens before the moves now, whereas that was not the case 50 years ago when Milton Friedman coined the phrase long and variable lags. So, but now you have financial conditions changing, and the question is, how does it affect the economy? The standard channels are asset prices, interest-sensitive spending, and the exchange rate, for example. And we do see that happening, just not as fast as we would like. And I would attribute some of that to just stronger demand. Household savings were turned out to be higher. Household spending has been stronger, and that's by far the largest part of the economy.
In order to conduct monetary policy effectively, do you need at least a hypothesis about how much has already hit the economy? Because it's hard to know how much more you need to do if you don't know how far you've come.
So on lags, I think if you think back, it's been a year since the last 75 basis point hike we did. It was at the November meeting in 2022. The first one was in June, so it's more than a year. So we should be seeing the effects. By the way, they don't all just arrive on one day. They arrive and then they're thought to peak and then to diminish. So there's a lot of uncertainty around lags. And one of the reasons why we have slowed down significantly this year is to give monetary policy time to work. The truth is, though, you can find academic support for different speeds and duration of lag. So we have to use our eyes and a little bit of risk management and patience in slowing down the pace to make sure that we are seeing the full effects. And I think, again, that's part of why we've slowed down this year. We went very quickly in 2022 to catch up to where we needed to be, and now we're moving carefully with these decisions.
So when you spoke back in August of 2020 and sort of laid out the revisions to the framework, as it were, you said that in terms of anticipated growth, the sort of consensus had gone from something like 2.5 to 1.8%, I think were the numbers you laid out in that. Where are you now? Where's the Fed? Where are you? And what you think basically the long-run growth is? Long-run
potential growth is not something that moves around a lot over time, but my own guess is it's around 2%. I think that the standard mainstream view would be a little bit below 2%, but I would just say 2% real growth over time. And what causes growth is growth in hours worked plus growth in productivity. Growth in hours worked is a function of population growth in the long run, and also labor force participation. Many things affect productivity, but if you drop in reasonable, standard, longer-term estimates of hours worked growth and productivity, which is just output per hour, productivity growth, you get something around 2%, and that's higher than most other advanced economies.
As you look at it, do you see historical precedents for having a growing economy with high rates over a long period of time? I mean, as you look back, is it like the late 90s, for example? What analogies do you draw as you try to determine what this might be doing to the economy over the longer term?
So that's really a question about what the level of rates will be going forward, what the neutral level will be, and I think it's very hard to know confidently what the answer to that will be in 5 years. Some of the reasons why rates were low for the last 25 years were just the aging of the global population and globalization, and so lots of savings and relatively with an aging population, savings greater than investment, so rates are lower, and productivity was low. So all of those led to low interest rates. So what has changed with the pandemic? You might see less effects from globalization. Certainly demographics, the aging of the global population has not changed. This is a discussion we're having on an ongoing basis. It doesn't really affect current policy, but where will rates settle out? What will be a normal rate? So if a typical Fed tightening cycle would leave you at 5 or 6%, and this is in the before the pandemic and before the low inflation period, you would have had Fed rates in 4 or 5% or even higher frequently. Are we going back to that? I really don't know. I wouldn't want to speculate. My guess is it'll be somewhere in the middle, but I don't know. I think we can say this now. The effective lower bound is not an issue. We were very concerned about that. Right now, we're very far from the effective lower bound, and the economy's handling it just fine. But that's because we're at a time of really elevated demand coming out of the pandemic as we reopened with fiscal stimulus and monetary stimulus. We have very strong demand in the United States. Hard to know what the economy will want in the way of interest rates when 5 years from now, when all of the effects of the pandemic are behind us.
You mentioned the long-term equilibrium rate, which you talked about again back in Jackson Hole in August of 2020. Back then you said you thought the sort of consensus had come down. I think it was from like 4.25% to 2.5%. Where is it today?
So I think by any reckoning, long-term interest rates and the neutral interest rate came down steadily over the course of several decades. So where is it today? I don't know. We're finding it basically. The idea was, I think the median indication of what the real neutral rate was around 50 basis points before the pandemic. It may have risen in the near term. The real question that matters, though, is will it rise in the long term? And that we don't know.
But do you need to know it in order to conduct monetary policy? You must have to have at least a theory. I'm not saying you have to be right about it, but you have to have a hypothesis, don't you? As you look at the data, you have to put the data through some sort of theory.
So we all write down our estimates of the longer run neutral rate every quarter in the summary of economic projections. And that's based on models. It's based on also looking out the window and including lags, thinking how are our current rates affecting the economy. So the evidence of your eyes is that the economy is handling much higher rates, at least for now, without difficulty. So notionally, that might tell you that the neutral rate has risen, or it may just tell you that we haven't had rates high enough for long enough. You're right, though, but we have models for everything. We have formulas for everything. Ultimately, as a practitioner, we have to be focused on what the economy is telling us, even taking lags into account. What's it telling us? Does it feel like policy is too tight right now? I would have to say no. I think the evidence is not that policy is too tight right now. And we're at 5.25% to 5.5%.
Do you think we're entering into a new phase in monetary policy? We had the Volcker disinflation, I think you referred to it as, and then we had sort of inflation targeting for a time. There was concern about secular stagnation. We were pushing the zero bound, as you said. We were concerned about that. And then we had the pandemic, and we had the real problem with inflation. What's the next phase look like? How would you describe it?
What we've been through is in all of the advanced economies around the world was a period where the effective lower bound, the proximity of interest rates, risk-free interest rates to the effective lower bound, which is 0 or a little bit less, was a big problem for monetary policy. And just rates came down and down and down. And the problem is, if rates are going to be close to 0 in good times, then how do you cut? And so have central banks lost the power of their most important tool, which is interest rates? This was a subject of a vast literature in monetary policy research for 20 years. And you know, the most common answer was some kind of a makeup strategy. So you would credibly promise to run inflation a little bit hot and above 2%, and that would anchor inflation at 2% to counter the times when it was below. So that was a very serious problem which filled books worth of research. Then comes the pandemic, then comes the response to the pandemic, and then comes the pandemic inflation, not just in the United States, but everywhere. The question is that a secular change, or are these factors that brought us to that place, are they still out there waiting to come back? And you know, books are written on this subject now. You can argue that, and some have argued that effectively the last 20 years before the pandemic were kind of a perfect storm of disinflation, and now that's all gone, and we're going into a more inflationary period that will be characterized by more supply shocks and things like that, and therefore more inflationary pressure. Yeah. So are we going into such a, I don't know. I mean, all I can tell you, I think it's unknowable, and you know, great theorists and researchers have different views on this. It's not something you can settle in advance. We'll have to see. I think our issue is right now trying to achieve a sufficiently restrictive stance of policy to bring inflation down to 2% over time. That's what we're really focused on.
Whenever any of us go, particularly institutions, go through tumultuous times, and goodness knows you've been through a tumultuous time, we look back and think, okay, what did we learn? Sort of an after-action report. Look at the pandemic and the pandemic inflation. What would you say you learned in terms of macroeconomics, in terms of the economy, from that experience?
So hindsight is always a wonderful thing, right? I think the fair way to judge the actions that were taken is to put yourself in the place of legislators and policy, other, you know, and central bankers around the world. And there was no playbook. You know, we hadn't seen a global economic shutdown. People were thinking that the pandemic might kill a whole lot of people and that we wouldn't have a vaccine for 5 years. And we might not have an economy for 5 years. So these things were all very possible in March of 2020. And so we pulled out all the stops, and Congress pulled out all the stops. With the benefit of hindsight, could we have done a little bit less and had a little bit of inflation? I guess we could. But I think if you look overall at the performance of the U.S. economy, our economy is the strongest. We're actually also making the most progress on inflation, but we certainly have the strongest growth. We're back to prior growth trend, you know, not just level of where we were. We're actually back to the prior trend. The labor market, the last time we had this many consecutive months of unemployment below 4% was in the late 1960s. So it's more than 50 years ago. So our economy is doing very well from all of that. But you know, if you had perfect hindsight, you might not have had as much inflation if we'd done less. Although other countries who didn't do as much as we did also had substantial inflation problems.
I think my question was just a little bit different. It's not so much of assigning blame or saying, did somebody make a mistake, as are there things that going forward would change the way you conduct monetary policy that you learned from that maybe nobody had a reason to know at the time, but it was an experience you went through?
Well, you know, we were in a time of a very long time, in a reasonably long time, of disinflationary forces. And I think everybody's instinct had been attuned to risks coming from this direction, which is too low inflation. And so what this has taught us is that now that period is over, and we now have probably going forward a more balanced set of risks where high inflation and low inflation are both risks. In fact, right now the risk is still high inflation, but I'm assuming once we get back to 2%, we won't have that. But we've certainly learned that, and I mean, events are. The possible range of events is so much wider than what we think it is on any given day, right? The tails are so wide, and it's just not human nature to constantly be thinking about things that are way out in the tail, but they happen in financial markets and in economies. They happen far more regularly than they should.
I suspect every person in this room is well aware of what's going on with yields with bonds. It's been a big story, particularly in the longer end of the curve. What is your understanding of what is going on in the bond market and why those yields are going up, particularly, again, at the longer end of the curve?
So it's really two questions. One is why is it happening, and the other is why does it matter for policy? And so I would say on the why is it happening question, I think it's appropriate to have a little bit of humility. It's always hard to say exactly what's going on with longer term yields, but this is what I think we can say. First, what it's not. It's not apparently about expectations of higher inflation, and it's also not mainly about shorter term policy moves, so Fed funds moves over the next year or two. Really, if you can look at the 2-year, for example, and the 2 years moved up a little bit since September, but really the move is in longer run bonds. So it's really happening in term premiums, which is the compensation for holding longer run securities, and not principally a function of the market looking at near term fund rate. I think a few other ideas about, there are many candidate ideas, and many people feeling their priors have been confirmed by this event, I'll say, as well. But so one would be just that markets and analysts are seeing the resilience of the economy to high interest rates, and they're revising their view about the overall strength of the economy and thinking even longer term this may require higher rates. That could be part of it. There may be a heightened focus on fiscal deficits. That could be part of it. QT could be part of it. Another one you hear very often is the changing correlation between bonds and equities. If we are going forward into a world of more supply shocks rather than demand shocks, that could make bonds a less attractive hedge to equities, and therefore you need to be paid more to own bonds, and therefore the term premium goes up. So all of those are possible ideas. Then the question is, does it matter for us as long as I'm talking about this? So the way I think about it is, we change our policy. Actual and expected changes in our policy affect financial conditions, and persistent changes in financial conditions affect economic activity, hiring, and inflation. So one question is, are we seeing the longer run bonds, are they the increases in rates, are we seeing those come through in financial conditions in a persistent way? And I think if you look at financial conditions indexes, the answer so far would be yes, you are. Persistence, it will be a matter of just seeing with our own eyes, but certainly they're coming. If you look at financial conditions indexes, they're showing tightening, and it's a lot because of longer rates. Then the question is it endogenous? And is it just because the market expects us to take things, to take further actions to tighten monetary policy, in which case if you have to follow through. But that doesn't seem to be the case. It doesn't seem to be principally about expectations of us doing more. It seems that the other factors are the more prominent ones.
Another question is...
Bottom line, though, that means it probably does over time. It makes sense. It's something that we'll be looking at.
Well, that's the question I was asking, is over time. From what you understand right now, do you think this is a temporary phenomenon, or do you think there are structural factors, whatever they are, and we can talk about what they might be, that would really, this is the future we're looking at now?
Well, so of the factors I just listed, some of them are shorter term, some of them are longer term, and some of them could be either. So, for example, concerns over fiscal deficits, that could be a longer term factor. The change in correlations between stocks and bonds could be a longer term. I don't think we know. I think, basically bond prices are set by supply and demand. The supply of treasuries is a known thing, but demand can be affected by any and all of these theories, and also just by sentiment too, which is hard to characterize. So, markets have been volatile. They've been longer. You've seen the rates moving up and down a lot. I think we have to let this play out and watch it. But for now, it looks. It's clearly a tightening in financial conditions, and so we'll be watching it carefully.
Talking about the fiscal side, and you've been very careful repeatedly to say you want to stay in your lane, you're not responsible for fiscal issues. At the same time, you have to take into account, and it looks like the United States is going to have to borrow a fair amount of money. By the way, other countries are as well around the world. We have a big supply of treasuries coming on board. To what extent do you think that is a longer-term issue? And let me tie it back to something you referred to in your remarks, actually. When we see geopolitical conflict around the world, like in Israel, like in Ukraine, some of the buildup with respect to China, the defense spending is going to be elevated for the United States and for other countries. Do you take that into account in figuring monetary policy? Because it may well mean that we're borrowing a lot more money than we have in the past.
So we, of course, see the same things that everyone else. I just came back from IMF meetings this weekend, and there's a lot of talk of the very large resource demands that organizations like the IMF and of course countries are facing, and the need for substantial amounts of revenue. You mentioned military. There's also dealing with climate change and things like that. So there's a lot of that. We don't, as you mentioned, we don't comment on fiscal policy. Actually, the fiscal authorities have oversight over us and not the other way around, so we stay away from that. So I would just say everyone knows that it's not a secret, and about all I can say is we know that we're on an unsustainable path fiscally. It's not that the level of the debt is unsustainable. It's not. It's that the path we're on is unsustainable, and we'll have to get off that path sooner rather than later. It's not really something, though, that affects a monetary policy decision about how much we raise rates in the next 6 months. It's not going to be driven by. If there was some vast new fiscal policy that were about to be enacted, and then that would have an effect on the models and would have an effect on projections, and indirectly that would affect us. But we would not be in a position of responding directly to fiscal policy.
When we talk about the Treasury market, obviously there's buying and selling, and the United States government is issuing a lot of treasuries. There's also a question of who's buying, and we now have one buyer who stepped out of the marketplace, namely the Fed, which is a big buyer. At the same time, we're getting reports that maybe some of the overseas buyers may be pulling back as well. How do you take that into account in assessing where we're going with long-term bond yields?
So actually, I think buying by overseas entities has actually been pretty robust this year. So there have been some small changes, but I think by and large they've been buying robustly. Again, we look at the broad financial conditions. We look at interest rates, other asset prices. That's what we look at. We don't focus on fiscal policy. We wouldn't change monetary policy because of, for example, because we think that the U.S. is on an unsustainable path. Everyone knows that. We're just going to do monetary policy to achieve maximum employment and stable prices, and that's how we think about it.
I'm curious, though, one of the things you're most concerned about is the real economy, what's going on in the real economy. You distinguish yourself from some of your predecessors in that you have a significant exposure to the private sector, not just the public sector, academics. As you talk to CEOs, people in business, what are you hearing about the cost of capital? Because these bond prices are really affecting cost of capital for the first time in a while. There was a long time the cost of capital felt like it was almost zero. And business changes an awful lot when the price of money goes up.
I talked to several people this week who run companies, and they each said that the economy remains strong and that they don't see the consumer. You see, there's some areas where spending is softening, but overall, look at the retail sales number. The consumer is strong. Volume's not going up very much, but companies are profitable. Now, if you get to where I think the cost of capital would really matter would be for smaller companies and early stage companies, and that really does matter. So we don't have a lot of tools. We have interest rates, and they're far from perfect. It's famously a blunt tool, but it's what we have to get inflation down, and really the world counts on us to deliver low and stable inflation. That's what we have to do. And at a time like this, we know that we're having negative effects on. We had the home builders in this week. It's a very tough time in the whole home building industry. And we know that, but ultimately, what we want to get back to is a long period of price stability. That's the best thing we can provide, and that policymakers and businesses and everyone and people can just lead their lives not worrying about inflation. This is what we can deliver. It's what we have to deliver, and this is the time. Our independence is not for times when we're really popular. It's for when we're doing something that really the public counts on us to do. Notwithstanding that it's challenging and difficult, and higher interest rates are difficult for everybody.
You have not wavered from your commitment to 2%. You did it again today, 2%. No question about it. There are those who suggested, including some colleagues in the Fed, that maybe the bond market is doing part of your job for you. Is that the way you see it?
Look, I would say it this way. The whole idea of tightening policy is to affect financial conditions. And to the extent higher bond rates reflect that they do, they're producing tighter financial conditions right now. So that's how monetary policy works. That's literally how it works. So again, in principle, as long as bond rates are going up for some reasons, and they're not going up just because they expect us to do things, so that if we don't do them, they'll come right back down. And we don't think that's the case, actually. I don't think it's the case. It doesn't seem to me that's where analysis leads you. Then sure, that's a tightening. That's exactly what we're trying to achieve.
And therefore, it seems like almost arithmetic. It must reduce some of the impetus for you to continue to raise rates.
At the margin, it could. I mean, I think that remains to be seen. And by the way, I'm not blessing any particular level of longer-term rates, but just in principle, that's right.
So let's talk about the labor market. You referred to that in your remarks as well. And as you say, vacancies have come down some, although they still are pretty elevated, if I'm not mistaken. Quits have actually gone up some. It seems to be a tight labor market. What do you make of what's going on in the labor market right now?
Labor market has been extraordinarily strong. So what happened in the pandemic was we had a negative labor supply shock, is one way to think about it. So a whole lot of people left the labor market when the pandemic happened and then didn't come back. And so when the economy reopened and everybody, there was revenge travel and revenge everything, very strong demand, and there just weren't the people. So you had 2 job openings for every person actively seeking employment. We've never been anywhere near close to that. There was panic, and wages and bonuses, and particularly in things like in-person services where people had not gotten big wage increases and didn't want to come back to work. So that's where we were. So since then, there are very many signs that the labor market is getting back into balance, and I talked about some of that in my remarks. Surveys of work, we survey businesses. We don't do it, but other people survey businesses and say, are workers plentiful? And that measure was no, but now it's back to pre-pandemic levels. You survey workers, are jobs plentiful? And that was at an all-time high, and now it's still high, but back. So wage increases are coming back down to more normal levels. Job openings are down from 2 to 1.4. They were at 1.2 in the very tight labor market of 2019. By the work week, by so many measures, the labor market is gradually cooling. And part of that is this, all through 2022, we thought we were going to get more labor supply, and we didn't. And I personally thought, well, I guess we won't get any. And then we've gotten a substantial amount this year. The female labor force participation is in prime age workers is at an all-time high, which has to be related in some way to work from home. But labor force participation increased, immigration increased, and now you see that in the overall cooling of the labor market. So even though job creation is still very high, there are the workers to fill those jobs. And again, businesses will tell you that it's very different. It's still a very tight labor market, but it's loosening.
Coming back to your goal of 2% inflation, what have you learned from this experience about the relationship between inflation and labor? I mean, there's a lot of talk about a Phillips curve, whether it still applies, whether it's weaker, what is it? What's your hypothesis right now with the relationship between inflation and labor market?
Well, let me tell you what it was before. So one of my favorite charts is just the slope of the Phillips curve over 40 years. And so it shows the relationship between unemployment and inflation. If you go back to the high inflation of the 70s, there was a very tight relationship. And that relationships went down and down and down to the effect where the Phillips curve, there was almost no relationship, meaning the Phillips curve was very, very flat. Now, actually, if you just ignore cause and just look at the data, it will tell you that the relationship is back. Do we really think that's a sustainable thing? I don't know. What happened, though, was that people came to seriously expect 2% inflation, something like 2% inflation. And if people expect that, if companies expect it, and workers expect it, and you expect that in your shopping, then that's what'll happen in a way. And that's what happened. So even in very, very tight labor markets, we didn't have high inflation. I was at the Fed since 2012 as unemployment went from 6 to 5 to 4 into the 3s for the first time. And the models were all saying that we should be seeing some inflation, and we never saw We never really saw 2% inflation on a sustained basis during that era. So we learned that the Phillips curve was really flat. Some pronounced it dead. Now, I don't think most of the inflation we're seeing at all is from the Phillips curve, though. I think it was really the collision of very strong demand, really strong demand, with constrained supply. Cars being a great example. Many people wanted cars, didn't want to ride public transportation, wanted to move to the suburbs. Unlimited demand for cars. Interest rates are low. Yet we couldn't get semiconductors, so there are no more cars. Car production went down. How do you solve that problem? Prices just go way, way up for cars. That's how you clear the market. So that's a classic example of what happened here. It really wasn't about the Phillips curve. It was more about constrained supply and demand more broadly, especially for goods at the beginning.
Let's turn to another responsibility of yours, which is the banking system. Last March, we had something of a scare because of, I guess, interest rate risk with Silicon Valley Bank and then some others. Are we through that now? Where are we in that process? Are you resting easy?
So what you pay us for is not to rest easy. We don't do that. But I would say where we are is this, though. Things have certainly settled down, we see the funding markets is fine. We see, and you know, we paid a lot of attention to banks that looked anything like the banks that had the problems, and made sure that they had credible liquidity plans and plenty of liquidity and all of that. And so I think all of that has worked. And we set up this facility that's available for banks to borrow. And so all of that has led to a real settling down. But, you know, our job is to be on the case, and, you know, we're still on the case, and we'll keep after that. Banks are generally very well capitalized and highly liquid in our country. Banks are strong. You know, we benefit from all those years of reform under Dodd-Frank and Basel III that we went through, with former Governor Tarullo, right, and many others. Yeah. And so we benefit from a very strong, well-capitalized banking system that's much better at managing its risks than the one that entered the global financial crisis.
Very well capitalized, but you want some more. This is a proposal.
Basel III proposal, which is, it's a rule that's out for comment, so there's not a lot I can say, but we do expect a lot of comment, and we do expect to take those comments very seriously.
Talk about commercial real estate. There are some concerns out there in the marketplace of what's going on, because obviously there's a repricing that comes with your increased rates. It's thought that there's some real estate out there that is not worth the money that was originally financed with it. How concerned should we be about that as something lurking out there that could really affect the system overall, not just the people invested?
So there's work from home, and that's affecting downtown real estate in a lot of big cities, and higher rates as well, as you point out. So this is an issue that we pay a great deal of very careful attention to. Commercial real estate is not a principal risk or a major risk for the very largest banks. Right. It is much more for regional and really the smaller banks have proportionally a much larger exposure to real estate, so commercial real estate. So what we've done is the supervisors are in there looking at real estate portfolios. They're working with banks to make sure that they have plans to deal with the problems they have in their portfolio. These problems evolve over time. They don't land with great suddenness like a market event. And so we're working with all of the bank regulators are working with banks that have concentrations of troubled real estate to work it out. There will be losses for sure. You can drive down through most downtowns, in many downtowns anyway, and see buildings that are empty and things like that. But we're working through it, and we're on that case, and don't see it as as presenting much broader problems, but our job is to make sure that it doesn't.
As you mentioned, regional banks are where a lot of people focus on this. As you conceptualize the banking system, what is the role of the regional banks? We have the super big banks that don't look like they're going anywhere, and we've got the community banks, the smaller banks that we understand are critical, particularly for small businesses and local context. But what about the regional banks? How much pressure is on them? And what would the damage be to the system if, in fact, there was more consolidation with some of the big banks?
I think the regional banks are very important, extremely important. We have 4,500 banks, which is a lot more than any other country per capita or per dollar of GDP. But we have, our GSIBs, the largest banks, are the leading banks in the world in profitability and in their success in their business. We have community banks who deal in smaller communities. But we also have these great regionals, and I think they do a great business with many companies, and I do think their business model is under pressure, and I would not like to see us add to that by treating them exactly like GSIBs. I think they don't need exactly the same attention that a GSIB gets. So, but I would say I personally think, and I think we at the Fed strongly think that the regionals and the smaller regionals are an enormously important part of our banking system.
Okay, you've been very generous with your time. Really appreciate it. I have one last question. Are you having a good time? And if so, why?
Now or?
No. I assume this wasn't that pleasant, but in general, are you enjoying your job?
I would say this. First of all, it's an incredible honor to do this job. And every day I do it, I feel so fortunate and so lucky and blessed to be entrusted with this. And, all I want to do is do the best job I can for the public that we all serve. And yes, there's a lot that is enjoyable about it, but mostly it's just so important to get it right, and that's what we're trying to do.
Thank you so much, Chair Powell. Really good of you.
All right, that was Fed Chair Jay Powell speaking at the New York Economic Club with our David Weston. And if you want to listen back to their discussion on the economy and interest rates, download the conversation on the Bloomberg Talks podcast, available wherever you get your podcast. Right now, we're going to head down to Washington, D.C. for Bloomberg's. All right, guess we're not going to. Oh, let's do a Bloomberg Business Flash right now with Denise Pellegrini.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And we do check the markets for you all day long here at Bloomberg. It is 101 on Wall Street. I'm Denise Pellegrini. We had quite a fuss with Fed Chair Jay Powell's speech at the Economic Club. It was briefly interrupted by climate protesters. But then after that room was cleared of the protesters, the Fed chair did indicate that geopolitics, including the war between Israel and Hamas, well, he said it could weigh on the economy. At the same time, the Fed chair also saying we could still see higher for longer on those interest rates. The yield on the 10-year, it is creeping even higher. We're tracking it closely for you here on Bloomberg Radio. And I'll give you those numbers in just a second here. We have COMEX Gold and spot crude also higher today. All right, let's take a look at the numbers right now. The Dow up 0.4%, up 154 points. The S&P 500 up 0.4%, up 17 points, we'll call it. And the NASDAQ up about 0.3%, up 44 points. The yield on the 10-year right now, really close to 5%. It is 4.96% right now. Spot gold up by about 0.7%. Crude oil up by about 0.7% as well. And we have Netflix among the shares absolutely surging today after those quarterly results and those word of the price hikes yesterday. And of course, we'll have a lot more on what Fed Chair Jay Powell told our David Weston in that fireside chat at the Economic Club of New York all afternoon here on Bloomberg Radio. And that is your Bloomberg Business Flash.
All right, Denise Pellegrini, thank you so much. We appreciate that. Paul Sweeney live here in our Bloomberg Interactive Broker studio in New York City. Just heard from Fed Chair Jay Powell. He made some comments at the the Economic Club of New York, and then he sat down with our own David Weston, Bloomberg Television, kind of talking about how the Fed is seeing things. So Federal Reserve Chair Jerome Powell suggested the U.S. Central Bank is inclined to hold interest rates steady at its next meeting. That was kind of the bottom line. This is Bloomberg.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
3 will not be a charm for Jim Jordan. Welcome to the fastest show in politics as the Republican from Ohio withdraws his name for Speaker after losing 2 rounds. Set to endorse Patrick McHenry now as an empowered temporary speaker. That's happening as we speak on Capitol Hill, and we're going to have the latest straight ahead from Bloomberg's Kayleigh Lyons, who's on the Hill for us today, with analysis from our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. If you're joining us on YouTube, and you can do that by searching Bloomberg Global News, you'll see that we're somewhere a little different today as we join you live from Bloomberg City Lab's 2023 event in downtown Washington, D.C., gathering mayors, innovators, and business leaders from all over the country at a time of chaos here in the nation's capital. And over the next 2 hours, we'll be joined by city leaders from across the nation, from Allentown, Pennsylvania to Fort Collins, Colorado. So stay with us. We have a lot to learn and a lot to cover here the next 2 hours. We start, though, with an update on Capitol Hill. Bloomberg's Kayleigh Lyons has been there for a couple of hours as things shift under Jim Jordan's feet. And Kayleigh, it looks like the Republican from Ohio is out of the running for Speaker. What's the latest?
Yeah, he's not taking himself out of the running entirely, Joe. What he is trying to support is temporarily giving more power to the Speaker pro tem, Patrick McHenry, so that he can try to continue whipping votes that he will need to actually get the gavel. There's a number of different proposals on the table. We understand that the GOP conference is actually still meeting in the basement of the Capitol, trying to hammer all of this out. One proposal on the table is from Congressman Joyce. It would empower McHenry through January 3rd. There's another on the table, though, from Mike Flood, which would actually give McHenry full power of the speakership, but for a shorter period of time until November 30th. There are a number of representatives who came out who spoke with reporters who have suggested they do not like this plan. Tim Burchett, Marjorie Taylor Greene, Ralph Norman, just to name a few, are not on board. So it's going to come down to the math here. It's not clear, Joe, that that kind of resolution has the support within the Republican conference. Then it would be up, of course, to the Democrats to see if something like that could get done.
So help me understand this, help all of our listeners and viewers here, Kayleigh, because when you and I were talking at this time yesterday, we thought there was going to be a third round. That's not happening now. Your point is that Jim Jordan essentially will stand in the wings while Patrick McHenry gets the hard work done as an empowered temporary speaker. And then what? There's another election, say in January, whenever that period ends?
Yeah, that's exactly right, Joe. To put it in the words of Congressman Tim Burchett from Tennessee, who was just speaking to me and a couple other reporters, he thinks this is just essentially kicking the can down the road, but in some ways it kind of is. Empower McHenry to do the work of the House in the interim term, things that need to get done, like funding the government past November 17th, trying to get potentially a supplemental package with funding for Israel through Congress as well. And in the meantime, behind the scenes, Jim Jordan will be trying to garner the support he needs to actually get the full speakership. So that seems to be the plan, but again, it's unclear at this time whether or not that plan will move forward. My understanding from speaking to members in the hallway is that they're going to try to sort this out to some degree behind closed doors before taking anything to the floor. So it remains very unclear whether we'll see anything heading to the floor today.
Wow. Really amazing stuff here, Kayleigh. And of course, that means funding for Israel, Ukraine, Taiwan, and the border, as we've discussed, coming together into one piece of legislation. We'll just have to wait. The president's speaking to the nation tonight to make the case for it, but there's no one to receive the bill.
Well, that's exactly right. It's going to have a hard time getting congressional approval when there's only one chamber of Congress at the moment that is actually functioning. The Senate seems eager to move on that, Joe, but of course the House is a different question, which comes back to the idea of if they can't coalesce around one individual who at this time can get 217 votes, which it seems at the moment Jim Jordan cannot, that McHenry needs to be able to act in that way to do that. But a lot of these members who are opposed to the idea think this is unconstitutional, that it may set a bad precedent despite the need to actually get things done in the House. It's just not something it seems that they can support. So they're still trying to figure out a way forward here to just be in a position to be able to pass that kind of supplemental request. Actually getting members to vote for something that includes funding for Ukraine, for example, is going to be an entirely different story that either a more powerful Patrick McHenry in a temporary role or ultimately a House Speaker is going to have the job of trying to do.
Pretty remarkable. Kayleigh, it's great to see you. Thanks for the update. Great work today on the Hill, and I'll meet you back in the Bureau a little bit later on. Bloomberg's Kayleigh Lyons, who's normally with us here on the broadcast, but we're on both ends of Pennsylvania Avenue as I join you from the Waldorf in downtown D.C., which today is hosting Bloomberg City Lab's 2023 event, and we're surrounded by a lot of people who work for government, elected officials who do not have the luxury of this kind of, well, I guess we'll say politics, that we're seeing in Washington. They have to deal with real matters in real time. Those are the mayors of towns and cities across the country, many of whom we're going to meet over the next 2 hours, beginning right now with Mayor Jenny Arndt, Democrat from Fort Collins, Colorado. Welcome to Washington. It's great to see you.
Well, thanks for having me,
And thanks for being with us here on Bloomberg Radio. You just heard Kaylee describe the madness that's happening just blocks away from here. And I wonder, first of all, what you're hearing from folks in Fort Collins when they watch the news, read the papers, go online and read stories that just don't seem to make sense.
Well, they fundamentally think Washington is broken, and I think that we can see that it is right now. And hopefully, we all hope for the best. And in the meantime, we continue with our work at the city.
So tell me what people are talking about and what you're focused on right now, because we're speaking a different language here inside the bubble.
That's right. Well, one of the advantages we have in city government, our city government, is you introduced me as a Democrat, and I am lifelong.
Yeah.
But we run on a nonpartisan basis in Fort Collins, so we don't have that sort of divide pulling us and pushing us in different directions. I think that's an advantage. Some cities run that way. Right now, we're just in the middle of a housing crisis. Fort Collins is the third most expensive housing market outside the coasts in the United States. So we have restrictive occupancy limits. We call it U+2. Just you and 2 other people can live in a house. And we have a 35,000 person university, Colorado State University, in our city. So we have occupancy restrictions, and then we have a lot of restrictions on building. And right now, Tuesday night, I had to miss the first part of City Lab because I was up taking the second vote on creating more housing in Fort Collins. And I just read right before I came down here, we passed it last year. There was a citizens initiative to have it repealed. That they were successful. We passed it again on Tuesday. And I just read right now that they're trying to repeal it again.
Well, gee, and here we are with nearly 8% mortgage rates on a 30-year mortgage. This is very real for people who are, particularly young people who are trying to buy into the housing market. Does that make it more difficult to draw workers to Fort Collins?
Oh, it is
in a growing economy?
It's one of the least climate awareness things we can do is to block people out of our city, yet ask them to come in and be our police officers, our teachers, our nurses. We're closing and consolidating schools. At the same time, our city is growing. So we are fundamentally not attracting or being able to have people affordably live in our town.
You reached first for the housing market, which is fascinating to me, and it leads us directly into interest rates, which brings me to inflation. We hear about it every day here as almost an abstract in Washington. We, of course, are a data company here. We pore over this stuff on a daily basis at Bloomberg. But bring it home for me in a way that we might not hear conversations in Washington apply. How much do you hear about higher prices making life difficult beyond housing, but just day-to-day needs?
Sure. Also on Tuesday night, so recent red hot, we just increased our utility rates. I mean, those things are real bills that go to real people every month. And of course, it hits the least among us the hardest because they pay a higher percentage of their income on utilities.
Yeah.
So we increase power and water. So these are real things.
So what are you getting from Washington or not getting from Washington? We talk a lot about infrastructure and investments through the Inflation Reduction Act that are bringing investments to cities like yours. But you might not have a relationship with your member of Congress that supports those ideas.
I do. I have Joe Neguse is our congressional representative, and we have 2 wonderful senators from Colorado.
Yeah.
We work really closely together. Sometimes Fort Collins doesn't get the grants other communities do because as a wealthy community, we have already sponsored some of these initiatives on our own. And you know what? I'm fine with that. If there's another community that needs it more than we do, I think it should go there. But we have been successful in federal grants in our bus rapid transit and other things.
You have another member of Congress in Colorado, Lauren Boebert, who's been making some waves and making some news.
Yes, sir.
Will she still have that seat following the election?
We're trying everything we can to restore the reputation and the good representation for the people of Colorado.
Yeah. Is that a talker, as we say? Is that an issue on the table for people in Colorado to the extent that it is the sort of tabloid political media?
Yes.
It is?
Yes, and I'm very familiar. I was in the legislature for 7 years, and I have a lot of West Slope colleagues. And although it's a more conservative part of our state, everyone deserves to be represented.
Yeah. I'm glad you joined us. Thanks for being with us, and I wish you luck at City Lab here. I hope it's a productive visit to the nation's capital. Absolutely. Mayor Jenny Arndt with us from Fort Collins, Colorado. Here on Bloomberg Sound On, I'm Joe Matthew in Washington. Are we going to Nancy for an update? Is that the plan right now? No, we're not doing that. We're just hanging out here at the hotel. You should come down and see us here. As I mentioned, it's Bloomberg City Lab's 2023 event in Washington. We're just blocks away from the downtown bureau here at Bloomberg News. And we're going to connect in just a moment with Rick Davis, who's with us here at the hotel, and with Jeannie Shanzano, who's going to join from New York. If you weren't with us at the top of the program, pretty important here. We've had a major development in the race for Speaker as Jim Jordan basically cancels a third vote. He had failed the first and second rounds. A third that some thought might happen today has been scrapped, and Republicans are meeting now, the Republican conference in the House, meeting behind closed doors to figure out next steps. I can't tell you what they are because they don't know what they are. And moving forward here, you might be hearing the name Patrick McHenry a lot more often. The acting speaker could be empowered to be an actual speaker and help to shepherd through legislation on the budget, among other issues, including these supplemental requests for financing for Israel, Ukraine, Taiwan, and the border that we've been talking about so much. Also making news today here, we've got new polling data out from Bloomberg. This is something that you've been hearing about throughout the day. We're going to zero in on a bit later when we talk to our panel and with Eli Yoakley from Morning Consult. This is brand new from Bloomberg and from Morning Consult. That brings us to the campaign trail with some real issues of concern here for Joe Biden. And we'll get into that a little bit more in detail a bit later on here. This is a swing state poll that brings forth some very concerning numbers on the economy and just even the overall horse race for President Biden. I'm Joe Matthew in Washington, and glad you're with us here on Bloomberg Sound On as we add the voice now of Mayor Aftab Pureval. It's wonderful to see you from the great city of Cincinnati. Welcome to Washington.
Thank you so much for having me.
What brings you to City Lab, first of all? I've been talking to various mayors from around the country, and everyone seems to have a different issue or a different agenda in a way that you can make this event productive.
Yeah, we have been really fortunate to be the recipient of extraordinary investment from Bloomberg Philanthropies and a whole host of issues, but predominantly in closing the racial wealth gap in Cincinnati and using data in order to do it. We partnered with Bloomberg to study a year-long study of the barriers to wealth generation amongst Cincinnatians, specifically Black Cincinnatians, and that year-long process resulted in recommendations on how to mitigate the damage and also improve wealth generation in specifically our Black and historically Black neighborhoods. Mm-hmm. And you know, the data is very, very clear that if you invest dollars into programs that put money into the hands of people who need it most, the results are transformative. Mm-hmm. And so with Bloomberg, we were able to pass baby bonds for all of our preschool students going through our Preschool Promise program. They will get savings accounts that will follow them over the next 3 years because 60% of kids who have access to a savings account go to college. We're spending $1.3 million to wipe out medical debt for 30,000 residents because medical debt is the biggest barrier for wealth generation amongst our Black citizens. And finally, we have seeded a universal basic income program. Mm-hmm. During the pandemic, the federal government's injection of cash into low-income communities showed huge benefits, and so we're trying to prolong those ARP dollars with our own local program.
Well, that was quite a list. It's a lot different than the lists I hear in Washington, and that's been a theme, and I suspect will be throughout the broadcast here. But what do you make of what's happening in town right now? The story is that we can't get along, we can't get anything done. Congress is literally on hold right now without a speaker. And we're dealing with some very pressing issues at a clearly urgent time here for our democracy, for funding our government. Does that have a spillover effect into cities like yours?
Of course it has a spillover effect. The bipartisan infrastructure bill, President Biden's ARP program, the CHIPS Act, the Inflation Reduction Act, these are having profound impacts. Federal government legislation, federal action is having profound impacts on our local economy, on our public safety, on our housing issues, on climate. And without those federal dollars, without that leadership, we just don't have the resources necessary to fight back against these macroeconomic problems. So what you see in D.C. is the opposite of what you'll see in major American cities. It is impossible for a mayor not to be pragmatic. It is impossible for a mayor to be extreme. because we are so proximate to our citizens and so proximate to the issues. No one cares if I'm spinning or obfuscating. People expect a mayor to be the moral voice of their city, to take clear, specific stands on hard issues, and most importantly, lead. And that's what we are seeing across the country, specifically in Cincinnati on racial wealth gap inequalities. And that's what we need to see more of in Washington, D.C.
Do you have a partner in the Biden administration?
We do. I'm very close with the Biden administration. Cincinnati recently got the single largest federal grant in our country's history, $1.6 billion to redo the Brent Spence Bridge, which is critically important to Cincinnati, but also critically important to interstate commerce. 3% of our GDP goes over that bridge. We're using the bipartisan infrastructure dollars to reconnect historically black communities that were destroyed by the highway development in the 50s and 60s. The CHIPS Act paved the way for Intel to make a $200 billion investment in Central Ohio, the largest semiconductor plant in our country, and we will see a massive supply chain impact in Cincinnati based on that investment. So across the board, we are seeing real impacts in Cincinnati for what's going on in D.C.
We have a new poll out today, Bloomberg and Morning Consult, that really makes clear the importance to which the economy is going to factor into this election cycle coming up here. We talk about a lot of different issues around this campaign, from reproductive rights to student loans, but the economy clearly rises to the top. I wonder if you see and feel that, and what the concerns are from people who live in Cincinnati. We talk about inflation, and in the abstract, what does it mean for people in your city?
It's a real challenge. The macroeconomic factors, inflation, interest rates being so high, insurance rates being so high, construction costs being so high. It's very, very hard to get anything out of the ground right now.
Does that end up being a problem for Democrats?
I don't think so, no, because the Biden administration has passed legislation to address those issues, and by passing those pieces of legislation, Cincinnati, just our example, is seeing huge benefits from our local economy to even things like public safety. President Biden's leadership getting ARP dollars into cities literally saved Cincinnati. We would not have been able to afford to exist as a city without those ARP dollars. And so much of the negative rhetoric around police funding happening in Washington, D.C. has nothing to do with the lived reality in Cincinnati. In fact, it's President Biden and Democratic mayors across the city that are actually funding public safety.
We're spending some time here with Mayor Aftab Pirval, the Democratic mayor of Cincinnati, as part of Bloomberg's City Lab event here in Washington, D.C. What do you end up taking away from this when you see your counterparts from cities in very different parts of the country who are dealing with different realities?
How similar the issues are. Every major American city and every American
the ones we're
mayor
already talking about
is dealing with housing shortages, is dealing with climate change, is dealing with public safety and gun violence, and is dealing with economic development in a really kind of uncertain economic period. Those issues are not unique across the country, but tailoring bespoke strategies to make an impact on your specific municipality, getting feedback from other mayors who've tried similar things on similar issues is really incredibly important.
As you look ahead to a time with the Speaker of the House, maybe some funding initiatives that go into this new year, what's the priority for Cincinnati? You've mentioned a housing shortage. Jenny Arndt from Fort Collins grabbed that as the first issue that she mentioned as well. What can Washington do when we have 8% on a 30-year mortgage?
Yeah, well, public safety will always be first, second, and third from a priority perspective for probably most American mayors. But I do think housing shortages is a real problem across the country. And more people view housing as a basic service akin to snow removal or trash pickup or fixing potholes. And unfortunately, the way our city governments are structured, we do not have the resources that a HUD does on the national level. And so having the federal government take a more active role in cracking down on institutional investors, on providing more creative solutions to rental equity. You know, the Emergency Rental Assistance Program through ARP was wildly successful. More national legislation around that, around access to housing and renters' rights is absolutely necessary.
I'm really glad you could join us. Nice to meet you, Mayor Pirval.
Thank
Great to have you with us here on Bloomberg Radio. I'm Joe Matthew in Washington as we assemble our panel On a very important day here in the Capitol with breaking news from Capitol Hill, Jeannie Shanzano joins along with Rick Davis. Jeannie's in New York, our Bloomberg Politics contributor, Democratic analyst, and we'll get Rick in on the conversation, of course, Republican strategist, and a voice that we want to hear from. Jeannie, I'll start with you as we learn of yet another major development here in the race for Speaker. We said this was going to happen yesterday. You fast forward a day, it's going to be a whole new conversation with a different name, although that name is pretty familiar. Will Patrick McHenry be the next Speaker of the House?
You know, I think he may. I'm not sure he will be Speaker, but they may extend his powers as Speaker pro tem. That seems to be the debate. And I thought, Kaylee, in your discussion earlier on, was a great sort of encapsulation of the challenges of doing that, because you have some, you know, far right-wing Republicans who are nervous about that. You have others who are nervous about it from an institutional perspective. To do it, it's going to really take a bipartisan group. And then, of course, how fascinating would our lives be, Joe, if we have Patrick McHenry as Speaker pro tem with these extended powers, and then you have, you know, Jim Jordan, Speaker designate still, because he hopes to run in the new Congress. And what that is going to look like is going to be utterly fascinating. And if I could, Joe, just to follow up on your conversation with the mayors, which I absolutely love, reminded me so much of why Louis Brandeis would call the states and localities the laboratories of government. They are talking about and doing the most important governing that happens in our country. And I wish it was possible for Washington to emulate them, because they're talking about issues that matter, like housing and infrastructure and all those things. So I think it's so fascinating to hear your conversations and to hear about the work they're doing, and in some cases from a nonpartisan perspective.
They don't have the luxury of fooling around or waiting around like lawmakers in Washington do. Rick Davis is with us here at the Waldorf at Bloomberg City Lab, and thanks for coming over. It's good to see you here at the table, Rick. I mean, to that point, before we get into the speakers battle, there is something about talking to mayors. You know, I think it was Tom Menino in Boston who used to say potholes aren't Democrat or Republican.
Yeah, John McCain used to tell a story about people calling him to ask if they could get their trash picked up on time. And he said, why don't you call your mayor? And they said, oh, well, they're much too busy to be able to have to deal with these issues. So that's pretty typical.
So what's going on around here? Jim Jordan was going to have a third vote. Now he's not. We've talked a lot, Rick, about the possibility of empowering Patrick McHenry. I think days before everybody was onto this, you were pointing to it. Is that still the solution?
It is still a solution. It's a complicated solution. It may be extra constitutional. I mean, nobody's ever done this. We've actually been spending a lot of time doing what no one's ever done in the history of our country lately. And so there's a lot of pushback amongst parliamentarians, even in the Senate and the House, to just determine what procedures are required to even do that. And so we know that the Democrats have been talking about this for some time. I mean, if I'm Patrick McHenry, I wouldn't allow a vote to be taken that doesn't make me Speaker. You know, any idea that somehow this is a stability thing, if you actually put a limit, like, you know, January 1st.
That's what they're talking about.
I know. It makes no sense, because you're right back where we started. And if anything, what Jim Jordan figured out today is that things have gotten worse for him in the House, not better.
Yeah.
And that means things are only worse for the next candidate for Speaker and not better.
Right.
And so they need to bite the bullet and just get on with business. Anybody who votes for Patrick McHenry for additional powers actually should be the ones voting for Patrick McHenry for Speaker, because then we turn the page on this and get back to the business of the Senate.
Wow.
Or the House.
Yeah, absolutely.
We actually need some business in the Senate, too.
That would help maybe to get something done here. Jeannie, what do you make of that? I don't know if Patrick McHenry actually wants the job, but they're talking about a closed-end deal here. Should Hakeem Jeffries be on the phone with him making a long-term power-sharing agreement right now?
You know, I think Hakeem Jeffries made a really good statement yesterday in which he said, you know, we do not have the majority. And he also took quite a dig at the Republicans by saying, we respect election results, and so we don't pretend we have the majority. And then he said, we are looking for a bipartisan solution, and they should be looking for a bipartisan solution. And knowing Hakeem Jeffries, I think that he is doing that behind the scenes. But this really is going to depend an awful lot, obviously, on the majority, which are Republicans. And, you know, it's not surprising, but it is a bit distressing to hear that even this idea of giving McHenry what he needs to start to move forward with some of the business that needs to get done in this country, you're hearing splits in the Republican caucus. You know, we heard, and Kaylee and you mentioned, people like Marjorie Taylor Greene who are coming out and saying no. And to Rick's point, they do have a leg to stand on there because, you know, the speaker is a constitutional position, unlike the majority leader in the Senate, which is a rule of the Senate, you know, started in the 20th century. Yeah. The speaker is constitutional, second in line to the presidency, or third if you count it the other way. And so is this even possible to do it this way? And I go back to the fact, imagine if they extend his powers and he is Speaker pro tem Pat McHenry, and then you have Jim Jordan, sort of this man in waiting for January, when he hopefully can run and elbow out other people who want to be speaker. It is going to be a very bizarre relationship, I would imagine, and tense between the two of them potentially. And then not to mention, we heard coming out of the conference today, you know, Kevin McCarthy still fighting with, you know, Matt Gaetz. So the tension continues. And I think until Republicans put this behind us, we are all going to be suffering. So I hope there is a resolution. If nothing else, allow the majority to put bills on the floor and move forward and resolve the speaker issue as you can, Republicans.
Well, Jeannie just said a lot, Rick. As long as this conversation is taking place, we're going to talk in a little bit about new polling data from Bloomberg and Morning Consult. What does it mean for the Republican brand? Because Democrats are looking around saying, we're going to take the House this year.
Yeah, look, I mean, I think there's something going on politically that you know, actually appeals to the mayors here. We used to say all politics is local, right? And that's what really dictates R's and D's in the future of the national politics. A lot of that has changed over the last two election cycles since 2016. And I would say now the rule is all politics is national. And that means that whoever's at the top of the ticket for the Republican Party, and right now it looks like Donald Trump, is going to dictate the image and the breadth and the length of the Republican Party. Nobody is going to have a chance of rebranding the Republican Party, whether you're in the House or the Senate or a governor or a mayor, if Donald Trump is at the top of the ticket, because he will drive the Republican ballot in all these states. And what has also happened is we've polarized these states so much that Republicans all get the same vote. So gone are the days where you have a Republican senator and a Democratic senator, or a Republican senator and a Democratic governor. You only have, you know, probably 5 states that actually have that split now. So it just takes away that kind of flexibility. So we look at this dysfunction in the House, and the reality is that voters are looking at this going, who's the president candidate going to be? And that's how I'm going to vote.
Okay. Well, of course, that presidential candidate who will likely be the nominee took a stake in this speaker's race and he lost. Does that mean anything to voters?
You know, his losses don't seem to make a difference to his voters.
They're piling up.
Everybody else cares about that. But the reality is, you know, he lost in 18, he lost in 20, he lost in 22, and he just lost his speaker's race. I mean, like, it just doesn't seem to penetrate the Teflon that this guy has within the Republican Party.
Yeah. So what's the advantage there for Democrats then? How does Joe Biden capitalize on that, Jeannie? Because when we get to this, we're going to crack open this poll in a minute. This is not a layup for Joe Biden. He's dealing with some very challenging numbers when he's put in a hypothetical up against Donald Trump, and challenging numbers when you look at the states that matter on the issue of the economy.
That's right. And the poll is fascinating. And I know you're going to be talking about it. We're going to talk about it more. I am one person who is not convinced that this chaos in the House helps Democrats by any stretch of the imagination, particularly Joe Biden. And although it's not been polled on in a way where we can connect the dots, I do think the chaos in the House, well, we typically say that would hurt the Republicans because they're in charge of it. I think for Americans looking at what's happening in Washington, Biden doesn't win, and in fact, his numbers may reflect that. We now have chaos around the world, chaos at the borders, you know, issues in terms of housing, chaos in terms of inflation, and that doesn't benefit the president. So I think there's a warning sign for Democrats here. You should work as you can in a bipartisan way to get the House moving again, because this chaos is taking its toll on you and the president as well, particularly as it pertains to these states that you're looking at in these polls, these swing states. This chaos is dangerous for Joe Biden, and the numbers show it. So I think it's a warning sign that we have to take seriously. And to Rick's earlier point, I wouldn't have said this with a poll, 10 years ago, 15 years ago, but we are in a new time now when this kind of chaos is not just hurting the majority in the House, it's hurting the president as well.
Well, if politics are national, Rick, do they blow back even on these mayors who are with us here today at the City Lab? Does it go to that level on the local level?
As you mentioned earlier in your conversation with the mayor of Fort Collins, that's not a partisan election, right?
Yeah.
So a lot of these mayor's races are not partisan. Many are, mostly big cities, and mostly dominated by one party, Democrats. I mean, there aren't a lot of Republicans running for mayor of a big city in America. That is the base of the Democratic Party. And so even though you'll have council members, in districts in the city that reflect Republican precincts, you will not find very many Republicans who are the head of a big city. And Mike Bloomberg, when he first ran for mayor as a Republican, was one of the very rare Republicans in a big city that's dominated by Democratic voters. So it just doesn't have the same impact because of the demographic shift that occurred in the country, which is, Democrats really taking, the vast majority of the urban vote. And even now, sort of taking over large swaths of suburban communities that are covered by these cities. And I think that's part of what we're seeing in this poll is some Republican creep back into the suburbs where we used to dominate. Now we're actually trying to get back in.
How about it? Rick Davis and Jeannie Shanzano, great conversation here from the Waldorf Astoria in Washington, D.C., the home of Bloomberg's City Lab today in the nation's capital. We're going to be doing this for the next couple of hours, so stay with us and find us on YouTube. If you're not already watching, search Bloomberg Global News, and you can join us right here in the snazzy hotel. We'll see if we can get some crab cakes for you after we update the markets. Let's do that. We haven't heard from Wall Street since we started. Denise Pellegrini has an update on the markets from New York. Hi, Denise.
Hey, Joe, you made me hungry. I'm not sure I can stand here and do this for you now. That sounds really good. But of course, we do check the markets for you all day long here at Bloomberg. It's 1:35 on Wall Street. I'm Denise Pellegrini. Stocks are higher. We had this to contend with. Yeah, that's Fed Chair Jay Powell trying to give a speech at the Economic Club earlier today, briefly interrupted by climate protesters. But after the room was cleared of those protesters, Fed Chair indicating the Fed is proceeding cautiously, carefully. And that does indicate possibly no interest rate hike in November from the Fed. Powell telling the Economic Club there in New York, geopolitics, including the war between Israel and Hamas, well, that, he says, could weigh on the economy.
Geopolitical tensions are highly elevated and pose important risks to global economic activity.
At the same time, the Fed chair also saying we could still see higher for longer on those interest rate hikes.
We have models for everything. We have formulas for everything. Ultimately, as a practitioner, we have to, be focused on what the economy is telling us, even taking lags into account. What's it telling us? Does it feel like policy is too tight right now? I would have to say no. I think the evidence is not that policy is too tight right now.
And Powell also telling our David Weston in that fireside chat at the Economic Club of New York that the Fed is still focused on long-term price stability. The yield on the 10-year Treasury right now, it is creeping higher, 4.96% right now. It crept higher as Powell spoke, heard live here on Bloomberg Radio. And I did mention stocks were higher. That is not the case anymore. We just flipped to the red. The Dow down fractionally, down 2 points now. The S&P 500 down fractionally, down 4 points. The NASDAQ down about 0.2%, down 20 points. Spot gold right now, it is better by 1.1% at $19.69 an ounce. Crude oil, it's also higher up 0.9% at $89.13 a barrel. And we'll have a lot more on what Fed Chair Jay Powell told our David Weston in that fireside chat all afternoon here on Bloomberg Radio. Netflix shares are higher. They've been higher on this jump in subscribers that Netflix reported on yesterday. Tesla, though, those shares are lower after reporting its quarterly results. And we're also waiting for more word from the London Stock Exchange about what happened with that outage that they had earlier this morning that resulted in the halt in the trading of many, many stocks. So that's a big mystery right now. And that is your Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Something special today as we join you live from the Waldorf Astoria Hotel, Bloomberg City Lab 2023 event that has brought mayors and innovators from all over the country to downtown Washington. And what a time, without a speaker, without a plan. We actually just learned a little bit earlier that Jim Jordan will not stand for a third round of voting, something you can read a lot more about at Bloomberg.com on the terminal, and we're going to be talking about it more with our panel. Rick and Jeannie will have more with us in just a few. I'm Joe Matthew in Washington. This is Bloomberg Sound On as we add the voice now of Garnisha Ezediaro at Bloomberg Philanthropies. It's wonderful to see you, wonderful to meet you here. Thanks for being in Washington and coming on to Bloomberg Radio. Tell us what you do for Bloomberg Philanthropies, because that's an awfully important part of this City Lab event.
Sure. I have the wonderful opportunity of leading what's called the Greenwood Initiative, and this is a bold philanthropic portfolio that was started 3 years ago to add to the tremendous amount of work that we do at Bloomberg Philanthropies to make lives better across the world. The portfolio that I lead, Greenwood Initiative, is focused specifically on the racial wealth gap and helping Black families create intergenerational wealth, while also looking at the systemic disinvestment in Black communities and Black institutions across the country.
How can you get at that in a Washington that is so dysfunctional, as we keep hearing? I hate to be so cliched, but we're stuck in the mud when it comes to funding for so many important programs. The government will shut down in less than a month unless something happens.
Sure. I mean, what is incredibly interesting about philanthropy is that we get to step in and help cities, and help nonprofits.
So this is your moment.
Yeah, well, it is. We get to show up here. We, so far through this initiative, have already invested over $250 million in efforts across the country to deal with this issue, one of which is the Black Wealth Data Center that we created to invest in the data that people have available to make decisions about new policy, new programs across the country. We wanted to make that data available to practitioners, people who are using it every day.
Sure. How did the mayors at City Lab here intersect with your mission? Because they're all going to go home, hopefully, if this goes well, with new ideas.
Yeah, so the mayors at City Lab are focused on the most emergent ideas, and all of them, I'm sure you would hear, any of them would tell you that they are thinking about the most pressing issues and how to solve them. And so the work that we're doing, whether it is funding a new program and or putting data in the hands of mayors and their teams, or helping them diagnose problems, think about what the impact of those problems are, and look and investigate the intersectionality of these issues. It's not just a housing issue. It's not just a issue of entrepreneurs. These issues of equity are at the intersection of many things.
When you think about equity, you think about social programs that are going away.
Sure.
We've heard a lot about the child care cliff that we have already gone over, with as many as 70,000 child care programs that could expire because of expiring COVID-era subsidies. But there's more than that. There's the WIC program that would be defunded in a government shutdown. There are a lot of things, when you get granular, that would actually impact real lives. We hear from lawmakers often that a shutdown is not a big deal. Maybe it's something we use for leverage, but it does impact lives when you get down to that level.
Yeah, I mean, I think when we talk about equity, we are, in essence, having a conversation about people having the opportunity to take care of themselves, their families, and also to seed into their futures. And the data continues to show us that Black families have 1/8 of the wealth of white families, that the amount and volume of assets, as well as the different types of assets that Black families own, are at a minimal level compared to white counterparts and white families. And so we need those policies from the day-to-day and long-term policies to be in place to help level the playing field and create equitable solutions.
Garnisha, thank you so much for talking with us today on Bloomberg. It's great to have you. Congrats on City Lab and all the work that you're doing here in Washington.
All right, a pleasure. Thank you so much.
I'm Joe Matthew in Washington. This is Bloomberg Sound On, live from the Waldorf Astoria and Bloomberg City Lab. As you can see behind me, if you're on YouTube, You knew that already. If you're not, search Bloomberg Global News and find us as we reassemble our panel. Rick Davis and Jeannie Shanzano back with us here on a breaking news day in Washington that we're balancing here with a lot of fascinating conversations with mayors of cities and towns. Here he is now, Rick Davis, as we speak. Bloomberg Politics contributor Jeannie Shanzano is in New York. As we move to the data, Rick, I've been looking forward to this. I understand this poll might not have happened without your advice. So let's get to it. Morning Consult and Bloomberg News put it together to find some pretty fascinating results here. Donald Trump leading Joe Biden in 7 critical states by 47 to 43%. You could probably close your eyes and list those states without me telling you. Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, and Wisconsin. This is where the presidential race will be decided.
Yeah, and it's really amazing how consistent it is. I mean, when you look at these things in a vacuum, because all we've been seeing are these national polls that really don't make any difference to the electoral vote count, which is the only thing that matters in presidential elections. Then you drill down on these 7 states, which will decide the election, and you see some patterns. One of them is in states like Arizona and Georgia, where the president's numbers are the weakest in the country. You see, Donald Trump winning by like 5 percentage points on the ballot, and that doesn't change if it's a multi-candidate field. So we included in this poll, adding the third, fourth, and fifth candidates, Green Party and no labels and all these kinds of things. But we also did the 2 ways, which is just head-to-head. And it's amazingly consistent. I mean, in other words, even though some of these third-party candidates pull some votes from both candidates, when you do the 2-way, they all come snapping right back to another 5-point race in those 2 states. Michigan's the closest, which is almost understandable considering how close it was in the 2020 campaign. And yet, one of the consistencies across all the states is independent voters. They care about the economy more than anybody. It's the economy stupid is the theme of this poll, if there is one. And nothing else even comes close to being an important issue to voters of all classes. But in independents, it's almost 38% say, that it's the economy that they care about. And the next highest one is the border and abortion at 9%. So you see the importance of that issue. And they have Joe Biden doing very poorly. Donald Trump beats Joe Biden by almost 10 points on the economy.
Wow.
And that is the opening under which he is winning votes, because people are putting the economy ahead of their partisanship. And even within Democrats that supported Biden in 2020, 10% of those are talking about voting potentially for Donald Trump because of the economy, because they don't feel like the economy is better off for them now than before Biden was president.
That is amazing. Jeannie, almost twice as many say Bidenomics has been bad for the economy, 49% to 26%. It's even wider among independents, 52 to 17%. Infrastructure, Donald Trump gets better numbers on than Joe Biden. How do you rationalize all this?
I think what the Biden team is going to have to do is they are going to have to focus.
Maybe you can chime in on that, Rick, because the split on independents here, 52% to 17%, that's actionable.
Yeah, we've been talking about this now for 2 years. When inflation started to spike after the raft of spending by the government, we kept warning this administration. They clearly weren't listening to us, but it was like, you got to address this inflation factor. And at first it was like, this is just temporary, don't worry about it. And then it was like, it's the job of the Federal Reserve. Nobody has taken responsibility, and it is still a major topic in households all across America. So, I'm not surprised that people have sort of checked out on the Biden administration when it comes to handling of the economy.
Well, I'll tell you, the infrastructure line in particular jumped off the page to me. How does Joe Biden make sense of this? And if we get Jeannie back, please let me know. I want her to weigh in on this. How does Joe Biden, as the infrastructure president, even respond to that? It was a joke during the Trump administration that every week was Infrastructure
Week. Right, exactly. Part of it is you got to look at it holistically. You can't just drill down on any one issue. The Biden administration is seen poorly on all the issues, right? I mean, other than maybe, on issues like abortion and some of the other cultural social issues, where he ranks highly amongst his base primarily.
Yeah, right.
Everything else is hit with this paintbrush of incompetence, or just voters don't believe that he's getting anything done, even with $1 trillion infrastructure bill. And we've talked about this again. I mean, like, what are they doing to sell it? Right. Once a month, Joe Biden goes out and inaugurates a bridge. That's not what I would think you would want to do for a victory
want a
lap
whistle stop
around around $1 trillion infrastructure bill.
Yeah.
And as you know, a lot of that stuff hasn't really hit. There aren't all that many groundbreakings happening. These things are long lead time. And Joe Biden's losing his long lead time. He doesn't have time anymore to wait for that impact. He needs it now, and and certainly he'll need it within a year from now when the election actually occurs. And so the question for the Biden people is, are you going to step up your conversations around infrastructure? Are you going to step up your conversations around dealing with the economy? Specifics, not Bidenomics cures all ails. I mean, it's not one pill cures everything.
Sure.
And so, that's the question. A poll like this, Democrats are going to look at this and go, what do we need to do differently? Because what we're currently doing is not working.
So if you're planning this campaign and you've actually done this for a living in a remaining moment, do you have Joe Biden in a hard hat at every campaign event at a construction site for the next year?
I never let him go anywhere that he's not talking about the economy and talking about infrastructure, talking about creating jobs, talking about making the country, more successful financially. That's the grade he's going to get on Election Day. And if you think about it, I mean, he's just been distracted by war in the Middle East. That's tough enough as president, right?
Yeah.
You've got to have enormous discipline. He's got to deal with these kinds of issues around the world. They come in and they grab your attention. But that means every other waking minute that he's president, he needs to be talking about the issues that voters care about. And in this case, it screams they care about the economy.
Yeah. Rick Davis and Jeannie Shanzano with us, our signature panel, live from Bloomberg City Lab 2023 event in Washington, D.C. I'm Joe Matthew. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters, I'm Denise Pellegrini. AT&T shares advancing. That's after the company raised cash flow outlook and delivered an earnings beat. We get more from Bloomberg's Tom Busby.
AT&T now boosting its free cash flow guidance for the full year after posting mobile subscriber gains and profits that beat analyst estimates. It also raised expectations for a measure of adjusted earnings. Now this signals AT&T may be gaining back some ground amid the headwinds the telecom industry is struggling with as new mobile customer demand slows. The company and rivals Verizon and T-Mobile US have been trying to steal away each other's customers in recent years in a desperate hunt for growth. Meantime, promotions for Apple's new iPhone 15 could help lure new mobile subscribers, but we won't see the effects of those deals on the carriers until we get the results for the current quarter. Tom Busby, Bloomberg Radio.
All right, thank you, Tom. I want to turn to ESPN. We're getting word it could be worth $22 billion. That's based on a first look at results, according to analysts. CEO Bob Iger saying in July he is looking for a strategic investor for ESPN, and that filing today marks the first standalone results for ESPN. And billionaire investor Mark Lasry and Golden State Warriors star Steph Curry were there buying a team in the new golf league founded by Tiger Woods and Rory McIlroy. Lasry, of course, is a former co-owner of the Milwaukee Bucks. Curry, of course, led the group of investors buying the fifth team in TGL. This is a 6-team league that's set to begin play in January. And we'll have more on all that and other company stories coming up here on Bloomberg Radio. I'm Denise Pellegrini.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 1:55 on Wall Street. We check the markets for you all day long here at Bloomberg. Investors are digesting what's been going on with Fed Chair Jay Powell and those comments that we did get from the Fed Chair at the Economic Club of New York earlier this afternoon. Powell said a bunch of things that are really getting a lot of attention on Wall Street. His speech was briefly interrupted by climate protesters, but after the room was cleared of those protesters, the Fed Chair did indicate geopolitics, including the war between Israel and Hamas, really could weigh on the economy. And at the same time, the Fed Chair also said we could still see higher for longer on interest rate hikes. And so investors are kind of trying to figure out which Powell to listen to here. Powell also telling Bloomberg's David West in that fireside chat at the Economic Club of New York that the Fed is still focused on long-term price stability, so still in inflation fighting mode, even though we might not get that rate hike in November that we're thinking about. The yield on the 10-year crept even higher as Powell was speaking, and it's been creeping higher ever since. Right now, the 10-year yield, 4.96% and inching toward 4.97%. This is kind of weighing on sentiment for stocks a little bit. We're red across the board for the major averages. The Dow down fractionally, down about 4 points right now. The S&P 500 down 0.1%, about 5 points right now. And the NASDAQ, it is down about 0.2%. That is down about 22 points right now. We're also looking at commodities. Spot gold right now, it is up 1.2%. That puts spot gold right now up at $1,971 an ounce. And Brent crude right now, it is also higher. It is up almost 1%. So we do have that higher. And we'll have a lot more on what Fed Chair Jay Powell told our David Weston in that fireside chat all afternoon here on Bloomberg Radio. And that is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Spending time live from Bloomberg City Lab 2023 event in Washington, D.C. Thanks for joining and spending time with us on the fastest show in politics as we add the voice of another mayor. That's the purpose of this exercise over this 2-hour period. Mayor Matt Turk of Allentown, Pennsylvania. Welcome to Bloomberg. It's great to see you.
Thanks for welcoming me.
We spend time talking to lawmakers every day in Washington, members of the administration, and of course the narrative here is nobody can get anything done. The other narrative is you don't have that luxury. Based on everything that you're hearing and learning from your counterparts from around the country today, you must feel like you're in a special club when you're inside the bubble here.
You feel great. There's a bunch of people who know exactly what you're going through. Earlier today, I was sitting down with Senator Fetterman, who was formerly a mayor. And when you're talking to mayors, whether it's Senator Fetterman or it's Mike Bloomberg, mayors know something a little different. Like, they are uniquely situated to deal with problems. So these are a bunch of folks that they're sitting in the same seat that I am. They're in the same shoes that I am, and it's good to be around them.
I wish I had more time to dig down with you, but in the brief moment that we have to spend here together, people think Allentown, they think Billy Joel, they think manufacturing in the 1980s. How far has your city changed since then?
So far from those days. The city's economic base has fundamentally changed. We're much more regionalized now. We're the third largest metropolitan area in Pennsylvania. We're based a lot in healthcare and a lot in distribution, but also manufacturing is incredibly strong. But the biggest thing that's changed is the demographics of our region. We went from being a 0% Latino city in 1970 to now having the first Latino mayor of a Latino majority city in Matt Turk. So it's really different in our region, and I wouldn't want to be anywhere else. I love the new Allentown. I think one of the lines from the Billy Joel song was, "It's getting awfully hard to stay," or something like that.
Yeah.
It ain't true anymore. It's really easy to stay. It's really easy to be there. In fact, it's awesome being there.
Come back to talk to us about issues like housing and inflation and the others that you're dealing with here in Washington. And thanks for coming on to introduce yourself to us today on Bloomberg Radio.
Yeah, so housing in Allentown, housing in all of the cities of Pennsylvania, all the cities in the country, it's one of the primary issues that we have as mayors.
We'll talk more about it, I hope, with Mayor Matt Turk here on Bloomberg. Hour 2 of Sound On starts.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Hour 2 of Sound On, live from the Waldorf Astoria in downtown Washington, D.C. We're here for Bloomberg's City Lab event, spending time with mayors and innovators from around the country, but also covering breaking news today from Capitol Hill and walking up to what will be a primetime address later from President Biden from the Oval Office into your living room. We've got a lot to cover with fresh polling data out today from Bloomberg as well. Straight ahead, we'll talk with Eli Oakley, political analyst at Morning Consult, helped us gather the numbers in 7 critical states around the country. You're going to want to hear this coming up next after we bring you up to date on Wall Street. For that, we turn to Denise Pellegrini in New York. Hi, Denise.
Hi there. It's all about the Fed. Fed Chair Jay Powell speaking at the Economic Club earlier this afternoon. You heard it live here on Bloomberg Radio. He was briefly interrupted by protesters, but after that room was cleared of protesters, Joe, the Fed Chair did indicate geopolitics, including the war between Israel and Hamas, could really weigh on the economy. And he also kind of injected a rare personal comment in his remarks. Check this out.
Geopolitical tensions are highly elevated and pose important risks to global economic activity. Of course, our institutional role at the Fed is to monitor these developments for their economic implications, which remain highly uncertain. But I will also say, speaking for myself personally, I found the attack on Israel horrifying, as is the prospect for more loss of innocent lives.
Yeah, and at the same time, the Fed chair also saying in a speech, and then the fireside chat I mentioned with our David Weston at the Economic Club of New York, while the Fed is proceeding with caution, Powell said we could still see higher for longer on interest rate hikes. So you might read into that the Fed might hold and not raise interest rates at the coming meeting that wraps up in November, but that we could stay higher for longer. The yield on the 10-year, it's higher for longer right now, 4.96% right now, inching toward 4.9. 0.97%. The Dow, the S&P, the NASDAQ all lower. The Dow down fractionally about 15 points. The S&P 500 down about 0.1%, down about 7 points. And the NASDAQ down just about 0.2%, down 28 points right now. Spot gold, it's higher, better by almost 1.5%, $19.74 an ounce on spot gold. Crude oil also higher now, up more than 1%, close to $90 a barrel. We're at $89.23 a barrel. Netflix shares more than 16% higher. Netflix raising prices after the number of new subscribers surged. And we're still looking at this LSE outage, Joe, with the London Stock Exchange incident halting trading in many stocks earlier today. This was an 80-minute outage, hitting hundreds of smaller cap equities, although stocks on the FTSE 100, those weren't affected. But still, we haven't really gotten a clear word on what happened there. And that is a Bloomberg Business Flash. Joe.
All right, Denise, thank you. Welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington. We're not in the normal location, as you can see on YouTube. If you want to join us, search Bloomberg Global News on YouTube. We've got cameras set up here at the Waldorf Astoria in downtown Washington for Bloomberg City Labs 2023 event, gathering mayors and innovators from around the country. It's already brought some fascinating conversations to the program here as we go to ground in towns and cities around the country that are dealing with reality as opposed to the fantasy land that you might describe here in Washington, D.C. Now, one of the top stories today, beyond the speaker race, beyond the president's address later, and we're going to get to those as we move through the hour, Jim Jordan not standing for a third round as speaker, and President Biden will address the nation from the Oval Office at 8 p.m. Washington time. It all comes against the backdrop of new data, new polling data from Bloomberg and Morning Consult that we're going to dig into with Eli Yokley, our colleague at Morning Consult, where he's political analyst and no stranger to this broadcast. Eli, welcome back. We can call each other colleagues now, right? Because we're working on polls together, I think.
That's right. It's good to be here. You're like 2 blocks away from me right now.
I love this. Come by for the crab cakes later. I'll meet you in like an hour. Joe Biden, based on what I'm reading here, has a bit to worry about. And this is important, Eli. And let's start broad because we talk about national polls just about every day, I feel like. And they seem to mean less over time, because not only are the samples in some cases questionable, but we're so early, and it really comes down to battleground states. And this poll does just that. It zeroes in on 7 battleground states that will likely decide the next president of the United States. And when you cut out the noise nationally and look at these races, Joe Biden's got some work on his hands. What do you see?
Joe Biden has a tough road ahead of him. I mean, the national polls are telling us the same thing that these state polls almost are, which this race is much closer than he wishes it would be. He's underwater in Arizona and in Georgia and in Wisconsin. These states were so important to his victory in 2020, and right now he's losing a lot of people there. That's not where you want to be a year out from Election Day, but we are about a year from Election Day, and there's time for the president to improve on some of these.
Well, let's dig into some of the numbers more specifically here and the issues, Eli, because the economy was what was supposed to be the winning issue for Joe Biden. Bidenomics, the Inflation Reduction Act, the infrastructure deal, all of those bring lower scores for Joe Biden than Donald Trump. Can you walk us through?
I mean, the headline figure to me was half of voters in all of these states combined think Bidenomics has been bad for the country's economy. His message is not winning in these swing states where he needs it to be. And that's something we've also noticed in some of our national tracking. You know, when good things happen for the economy, voters are far less likely to hear about them than they are the bad things. He's got a case to make. The problem is the voters aren't hearing about it. And on every economic issue we tested, from housing to costs, Donald Trump has an advantage. Only about a third of voters trust Joe Biden to handle those things. He's president. This is his problem right now. Donald Trump is not in office, but clearly over the next year, he's got to work to convince the American people that Bidenomics is working for him.
If it hasn't happened yet, though, Eli, I know you're not a political strategist advising the president here, but my goodness, I was talking to Rick Davis a little while ago about these numbers. You can only have so many campaign events with a hard hat and a backhoe. Is that the next year for Joe Biden?
Yeah, I mean, and part of it is, the ad spending really hasn't started yet. The president hasn't yet made his political case to the American people. A lot of his campaign events have been going out and raising a lot of money. The other thing is, a lot of the economic news, when it's good, it's kind of boring. It doesn't get a lot of attention. And meanwhile, you've got a hot war in Israel, a hot war in Ukraine. The national media attention is focused a lot on that. The American people are too. And still, folks are going to the grocery store and things are expensive. And so whenever you hear about these wins of his, be it on chips, be it on infrastructure, those are like long-term policy victories that over time will yield results. That doesn't do anything about gas prices or how much it costs to buy a gallon of milk.
Well, we can go beyond the kitchen table issues here. As you point out, foreign policy is a problem as well. Trump fares better than Joe Biden on U.S.-China relations, as well as the war in Ukraine. And I don't know how much that has to do with the fact that Donald Trump has not been in office for this conflict. I don't know, there's not necessarily a real comparison to be made there, but he frequently says if he were president, this never would have happened. And if he becomes president again, he could fix it and end this war in 24 hours. What do you make of that?
I think a lot of that is Donald Trump's distance from the Oval Office at this point. Honestly, I mean, Joe Biden's underwater on every issue, almost every issue we tested, except for things like climate. I think the American people have just a bad view of him at this moment. And meanwhile, Donald Trump is just not getting the same kind of attention that he used to whenever he was in the Oval Office. I think part of this is the Biden campaign will need to litigate a case against the president on these national security issues. I think the Jack Smith case involving the classified documents is a pretty clear way of doing it. The challenge has been the president has been afraid to touch it, given the Justice Department's involvement in it. But you have the former president with classified documents down at Mar-a-Lago. That seems like a pretty easy case to make for the American people not to trust the former president. But the challenge is Joe Biden is overseeing now 2 wars, and this issue is front and center for him.
We're spending time with Eli Oakley, politics analyst at Morning Consult, which helped us generate the poll that we're talking about today at Bloomberg News. In these swing states, Nevada was actually the best showing for Joe Biden among the 7 that you isolated, Eli. Is that because of organized labor on the Las Vegas Strip, or is it something I'm not thinking of?
I think probably a lot of that is. It's also a rather more diverse state than some of these other states we've tested in this survey. I mean, Joe Biden is really struggling with white voters generally, and especially among the white working class, and that's dragging him down both nationally and in some of these other states. Joe Biden is still doing okay with members of labor unions across the board. I think he has some challenges maybe in some of these states, but clearly his attrition with white people in the white working class generally is a problem for him. I mean, since 2016, Donald Trump, his Republican Party has made notable gains in terms of caring about people like me, like the classic campaign question. And a lot of that has come from white people. A lot of it has come from lower earners. And in a lot of these states, those people decide elections, and they're not siding with Joe Biden.
Before I get to some of the other issues here, I have to ask you about infrastructure. Donald Trump, it was a meme, it was a joke here in town that every week was infrastructure week. He promised it, he never got it done. Joe Biden made this his signature achievement, the biggest investment in infrastructure since FDR, we were told. And Trump has an edge on the matter of infrastructure here as we look at the data on the terminal, 42% to 38%. How do we rationalize that? Is it because these jobs haven't actually begun?
I think it's a long-term policy victory that takes a while for voters to see. And I also just think Joe Biden is getting dogged down by people not liking him. I think they've got a lot of qualms about his age, and they've got a lot of qualms about the economy. And so you ask him about just about anything, and he gets negative views from the American people and these swing state voters we talk to.
Let's talk about demographics for a moment, Eli. Joe Biden still has one point of strength here that Donald Trump could be envious of, and that's female voters. Could women save his campaign?
I think they could. I think that that's what we saw in 2022. I mean, part of what we might be seeing in this election cycle is another setup of the circumstances we saw in the midterm elections. Voters talk a lot about the economy, but there's also other issues on their minds. And the abortion issue is one where Joe Biden has a slight advantage over Donald Trump. It's one that has clearly excited the Democratic base, but he's got to fix this economy issue. I mean, in our survey we did together, women notice this a lot more, and the cost thing hits them hard. There's been political science studies on this that women notice the price of groceries because they're often the ones doing the grocery shopping. This is clearly weighing on him. He should be doing better with them than he is today.
Well, when you say fix this, the White House would say, hey, look, we've got the strongest job market in history. We've come out of the hole with COVID. We've brought inflation down, albeit not all the way to the Fed's target. What else do you want us to fix?
It's costs. I mean, it's the cost of everyday goods. It's just dragging down.
So it's finishing the job on inflation.
It is finishing the job on inflation. And look, he's seen some good numbers. I think last week's report was a good report for the president. But who was talking about the inflation report last week? We were all talking about Israel and Hamas, and some of us were talking about the speaker's race in Washington, which is really not breaking through to the American people. The good news that Joe Biden has seen on the economy just isn't breaking through to the American people. It's incumbent on his campaign with all of the money they've raised to try to tell that story next year.
What are the surprises for you here? Were they the top line numbers, Eli? You do this for a living. A lot of these numbers surprised many of us, but for a pollster, what was unexpected?
I think I was surprised to see him actually underwater in some of these states like Arizona and Georgia. We knew he wasn't popular there, but we hadn't really dug much into the numbers in terms of the head-to-head contest with President Trump. The other thing is in this survey in all these states, we tested third-party contenders generally.
I was just going to ask you about it.
That the margins really didn't change between Joe Biden and Donald Trump. It seemed that maybe Biden took more of a hit, but in terms of the distance between him and the president, generally, maybe with the exception of Nevada, actually, it did not change things dramatically in his standing against Donald Trump.
Well, that's fascinating because you don't need me to tell you that people are working overtime and spending a lot of money to try to prevent a no-labels candidate, for instance, from running. Suggesting that could make the difference in a state like Georgia. Cornel West could even, we're told, make the difference in a state like Georgia where it could be down at 2%. You don't see it that way then. This poll does not support that.
You don't need much. I mean, that's the thing here is in these surveys, 1 point matters. I mean, ask President Hillary Clinton how Michigan and Wisconsin went for her, right?
That's right.
The good news for President Biden here is where he's struggling the most is among his former supporters from 2020. He lacks the backing of about 14% of them compared to only 9% of the attrition Donald Trump has seen since 2020. He has a chance to win these folks back, and he has a story to tell. He just needs to be able to sell it to people, and especially the people who voted for him last time. And maybe Donald Trump will help. As we get out of the Republican primary phase, he takes center stage, and President Biden is able to revive some of the same dynamics from 2020.
So give me the grain of salt then, Eli Oakley, before you leave us. How much are these numbers going to change in the next 6 months? What could they look like between now and actual election day?
Well, there's a good chunk of voters in all of these states, about 6 to 11% who said they don't know who they're supporting. And so that could make or break either side of this equation for either of these contenders because these numbers are so close. When you look at the national contest, the race is neck and neck. A lot of folks are still sitting on the sideline. The thing I'll be watching over the next year between now and election day is the Democratic enthusiasm number. Clearly Joe Biden has an enthusiasm problem. I think the question for him and his campaign is whether running against Donald Trump again will allow him to fix that problem and revive his 2020 base.
We've got a lot to learn and some time to learn it, Eli. Thank you for sharing time with us. This is going to be monthly, right? You're going to come back every month and talk to us about the latest data.
Absolutely.
think you're not getting away without it. Eli, thank you. Eli Yoakley, political analyst at Morning Consult. Find this poll. You can dig through all the crosstabs, Bloomberg.com, find it on the terminal as well, with some really interesting and in some cases counterintuitive findings from the campaign trail. We're going to continue the conversation ahead about what's happening here in Washington, D.C. 3, not a charm for Jim Jordan. Jody Schneider joins us from Washington along with Mike Dorning next. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 2:21 on Wall Street. I'm Denise Pellegrini. We check the markets for you all day long here at Bloomberg. Stocks are lower. Fed Chair Jay Powell's speech at the Economic Club briefly interrupted by protesters. But after that room was cleared of protesters, the Fed Chair indicating geopolitics, including the war in the Mideast, could weigh on the economy. That was one of the focuses of what he was saying. And he also seemed to indicate no rate cut is coming anytime soon.
We have models for everything. We have formulas for everything. Ultimately, as a practitioner, we have to, be focused on what the economy is telling us, even taking lags into account. What's it telling us? Does it feel like policy is too tight right now? I would have to say no. I think the evidence is not that policy is too tight right now.
And at the same time, the Fed chair also saying in his speech and then that fireside chat with our David Weston at the Economic Club of New York that the Fed is proceeding cautiously. The yield on the 10-year, it's not proceeding cautiously, though. It's up at 4.97, almost 4.98% now, creeping higher ever since we heard Powell live here on Bloomberg Radio. Dow, S&P, and NASDAQ all lower. Dow down 0.1%, down 49. The S&P 500 down 0.2%, down 8. The NASDAQ down 0.2%, down 25. Spot gold right now, it's higher by more than 1.3%, 1972 an ounce. Getting closer and closer to that 2,000 mark that some of the gold bugs have been talking about. Crude oil, it's lower by about 1%, higher rather, by about 1%, close to that $90 a barrel now at 89.17. Netflix shares surging, and that LSE outage still getting a lot of attention here. The London Stock Exchange incident halted trading in many stocks earlier today. Still no word on exactly what happened there. And that is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
As the ground shifts under our feet again here in Washington, D.C., welcome back to Bloomberg Sound On. I'm Joe Matthew in Washington, joined here at Bloomberg City Lab at the Waldorf Astoria, a special event that brought mayors in from all over the country, and Jody Schneider, Bloomberg's politics director for TV and radio. It's good to see you, Jody. Thanks for coming to the hotel here. This is quite a gathering. I hope you did load up on crab cakes upstairs. I'm encouraging everybody to take what they can because we still don't have a speaker. And this is where we're going to start. Mike Dorning is joining as well, a Bloomberg politics reporter. I want to get everyone's voice on this. Jody, we'll start with you because we left work yesterday thinking there might be a third vote for Jim Jordan. That seems to have been scrapped. But the plan D that I think we're on, was to somehow empower, elevate Patrick McHenry to the full powers of the speakership and keep Jim Jordan waiting in the wings to fight another day. But now that's not happening. What can you tell us?
Yeah, we're really in uncharted territory here. We every day it seems it's a new thing. But basically, they had a conference meeting. Jim Jordan said he would support McHenry having some expanded powers. So that led everybody to think, oh, this McHenry proposal is real. Yeah. Then they got in a closed-door meeting, and it was pretty contentious. At one point, there was discussion of McHenry being elevated. But a lot of people in the caucus said, well, can't we just do that? Do we have to go to a vote for that?
That's right. That he may have the powers somehow already.
Yeah, even though it's really unclear because they've never tried this before. Mm-hmm. And then there was some talk about, well, maybe we do something with the Democrats, and that was roundly dismissed. Mm-hmm. And the problem with this McHenry proposal or strategy is that a lot of people had thought the way to do it would be to make him an elected pro tem rather than an appointed one where it's unclear what powers he has when people had thought he really didn't have any except to call a speaker vote. But if you do the elected version, you need the Democratic votes. And they are still far from wanting to go to Democratic votes.
So we're still on ice. This really hasn't progressed at all. It's only become more complicated, it feels like. Mike Dorning, let's bring your voice in on this because we're trying to make sense of what's actually possible. What if Patrick McHenry said, okay, I'm speaker, and he started bringing bills to the floor? Wouldn't that make him speaker?
Well, it would depend on whether a majority sustained him. If there was someone that objected, then you'd have a parliamentarian ruling, which might go one way or the other, and you could appeal it, and then a majority of the House would decide. So you'd have to have a kind of a majority backing that up one way or another.
Yeah. Does Patrick McHenry actually want this job, Mike? Does anyone know?
He says he doesn't, and I don't think it seems likely he doesn't want it under this method, certainly. And he just keeps on saying, I support the nominee of my party to be speaker, and that's Jim Jordan, so I hope, he will do well as long as he continues to be the nominee. One of the problems you have here is the whole reason why the conservatives revolted is they didn't want to work with Democrats. So working with Democrats really is just a total non-starter for them. Another problem you have is the only reason that Jordan is saying to do this is so that his bid, which is failing, will have another 2 months to build support. And then you've got two big problems with that. One, there are all these other ambitious politicians waiting in the wings to be the actual speaker once Jordan fails. So it's in no way in their interest to let this go on. And the other is he's rubbed some people the wrong way by whipping up a lot of populist sentiment, and that's turned into death threats for people and intimidation. And the lawmakers are really unhappy about that. And the last thing they want is 2 more months of that.
Pleasure that you mentioned that, Jody. We haven't talked about that enough, I feel like, on Bloomberg Radio and TV. Marionette Miller-Meeks, Nick LaLota, who was on with us last evening on Balance of Power, and others are issuing statements saying they've had it. They've been getting death threats. Their families are hearing about it. Their spouses are getting phone calls. And that's a pretty quick way to turn off members of the Republican conference. How does Jim Jordan come back from that, or is this over?
Yeah, I'm not sure he can. It's gotten ugly, as you're saying, and there are reports of it. We're hearing from some members, and there's reports it's worse. And the issue is that he seems to be going backwards in terms of the number of votes he's getting. He got fewer yesterday, more no votes yesterday than he did the previous day.
Partly because of that.
Partly because of that, and because Jim Jordan is not somebody who's tended to reach out to people much. And now, now that, there's a number of issues here. Some don't like his, they feel like Donald Trump would be running the House of Representatives, and they don't like that. Some other people, his stance after on January 6th and after January 6th, don't like that. There's a number of things, but one of them is that, he didn't come to them until he really needed them, and some think they're strong arm tactics, and they don't like that. But the problem is now, if not him, who? And as we're saying,
there's no answer.
Yeah, there's really no answer. And I think that's why the McHenry, there's all this talk of McHenry, because the man is sitting there, in his bow tie, hitting the gavel when the gavel needs to be hit these days.
Yeah.
But the real question is you need somebody who can move legislation. And the administration's, if they haven't already today, will be moving very soon this request for funding for Israel. It has Ukraine money in there. There's said to be some other funding in there as well. And then it gets real that you have one branch of government that can, take up legislation, and another branch, another chamber that simply can do nothing.
Let's talk about that request, because the president is going into people's living rooms tonight to make the case for it. Mike Dorning, we have an 8 p.m. address from the Oval Office. This is a president who has not made use of the Oval as a platform, as a venue to deliver a message. They clearly think this is the time. How important will this be for the future of funding for Israel and Ukraine, for that matter? They're both going to be in the same bill, it looks like.
It will be very important, and the setting of the Oval Office it's a classic place to talk about issues of war and peace, momentous issues before the country. And here you have this idea of preserving Israel, defending it against a terrorist group, Hamas, and Ukraine, defending it against an authoritarian aggressor. And you can tie them together and give it the historical moment. And this, as Jody says, is going to be when the delays and the sort of disarray in the House start to matter. For the people make fun of, I don't know how many days it's been now, 15, 16, I'm losing track of the chaos in the House. But it, everyone says it matters, but it doesn't really matter because nothing's even really been asked of them. But when you have the president in an Oval Office address speaking about the tremendous importance for Israel, for Ukraine, for Taiwan, for the southern border to get money and act, and then you have a House that is unwilling, unable to act, that's when it's a potential problem.
So, Jody, the president tonight is not only speaking about Israel, but Ukraine. Of this $100 billion request, Ukraine is $60 billion, apparently. And people are losing their appetite for funding Ukraine. How does he pull this off?
Yeah, and clearly he's using, the fact that he will have this bill for Israel as a vehicle,
yes, right.
as we say, to get that funding in there, because there has been a lot of talk among Republicans about the fatigue on Ukraine funding, and including Jim Jordan, who's was, as of this moment, still running for Speaker,
yes.
And that has been a real problem in the House. And to some degree in the Senate, we've started seeing Republicans kind of tire of that there. And so I think the president is going to try, and it's a tough task, to bring up, kind of global world order. And this is not only an opportunity, but a necessity to deal with this, not only in Israel against Hamas, but Ukraine against Russia and Vladimir Putin.
Well, it starts at 8 p.m. Washington time. You will hear it, of course, on Bloomberg Radio, and watch it here on YouTube, where you can find us right now. Search Bloomberg Global News. Join us while we're still here at the Waldorf at Bloomberg City Labs 2023 event. In the meantime, let's get you up to date on everything else happening around the world. World and national news now from the newsroom in New York. Is this Nancy doing this for us? Nancy is actually in Washington. How's it going, Nancy?
Thanks, Joe. Former Trump attorney Sidney Powell has pleaded guilty to reduced charges in the Georgia election interference case. She entered the plea this morning, a day before jury selection was set to begin in her trial. Judge Scott McAfee sought clarification from Powell during today's hearing.
Do you understand the nature of the charges that have been reaccused and that you would be pleading guilty to today?
I do, sir.
And you've heard all the rights that the state has gone through that you would waive by going forward with this plea. Do you still wish to waive those rights?
I do. As part of her deal, Judge McAfee agreed that Powell will serve about 6 years of probation, will need to pay $2,700 in restitution, and will need to testify truthfully against her co-defendants, including former President Trump. President Biden will be addressing the nation from the Oval Office this evening on the wars in Israel and Ukraine. Bloomberg's Anne-Marie Hordern reports the president is expected to explain why those conflicts matter to the U.S.
What the president is going to say is really try to make sure that he is explaining his foreign policy goals and explaining the need to continue to support the national security concerns of U.S. partners directly to the American people.
Again, Bloomberg's Anne-Marie Hordern reporting from Washington. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
everybody. How are you doing today? Hope you're doing well. I'm going to place an order to buy Bitcoin. All of you guys who following my trades and want to trade, I want to buy Bitcoin at the price 28,595. Okay, guys. So place your order at 28. I'll do it with you as well. 28,595. Okay. Sorry, I opened the wrong chart. Bitcoin is right here. Okay. 28,595. Okay, and stay with me as soon as 595. As soon as we'll get filled with this order, I will guide you through this order, and I will let you know what's going to happen next. Please note that we're still holding the other position on Bitcoin at, I think it was 30,000. As far as I remember something, and we will have two positions, so it means we'll have more money, more profit when we will sell Bitcoin. So this is how we trade, okay? And hopefully you will follow our trades and you will see how we're going to make and profit on Bitcoin. Okay, guys? I'll speak to you later. As soon as we will get filled, I'll speak to you later, and you'll find out what's going to happen next. Unfortunately, as you can see, it went up, but hopefully we will get filled today with Bitcoin. Stay safe.
This was an 80-minute outage. We still don't have word on exactly what the problem was, and that is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Live from Bloomberg's City Lab 2023 event at the Waldorf downtown. We're not in studio, as you can see. If you're with us on YouTube, search Bloomberg Global News. I'm Joe Matthew in Washington. And we do have some breaking news from Capitol Hill. We've been following this all day. Bloomberg's Kayleigh Lyons reporting now that the Republican conference meeting in the House has ended, and we still have no idea what happens from here. Jim Jordan apparently will not stand for a third vote, at least not today. And there are a lot of questions about what happens to Patrick McHenry and potential enhancement of powers there. We'll keep you posted as we learn more about it, because this is a conversation we're having today that's going to be resonating for some time. I don't know if it's resonating in Scranton, Pennsylvania, but we'll find out right now, because we're joined by the mayor, Paige Cognetti. It's great to see you. Thank you so much for joining us here at City Lab on Bloomberg.
Thanks for having me. It's great to be here.
We'll get to all that stuff. Of course, the son of Scranton we hear about so often is going to be in everyone's living room tonight with an Oval Office address. Do you love hearing that when Joe Biden says Scranton as his hometown, even though he's lived in Delaware for so long? Is that good for business?
Absolutely. He is the son of Scranton. When you walk down the street, you're going to meet somebody. If you asked everyone whose mother's or uncle's funeral he attended in the last 40 years, he has always come back to Scranton. He really is.
So he's helped to nurture those ties
throughout from the very moment he left. I mean, he really has stayed a Scrantonian. So he makes it easy on us when people ask, "Oh, is he really from Scranton?" I'm like,
yes, the answer is yes.
Go down the street and ask.
Well, he
somebody.
always drops his address in his old address when he was a kid in the stump speech. I know that's part of the deal here. So let's talk about issues for a moment, because you're here dealing with reality, and that's kind of been the theme of our program. Mayors don't have the luxury of fooling around the way lawmakers in Washington do. And so here you are to the rescue, I guess we can say, dealing with a lot of the same issues that we're talking about here in Washington, from inflation to reproductive rights, a lot of the things that voters are going to make their decisions based on in the next year. Where does Scranton fall there? And let's start with the issue of inflation. We have a new Bloomberg poll out today showing the economy is going to still be, no matter what you think, the number one issue in this campaign. Do you hear about high prices, about high costs, about gasoline now to the extent that you may have a year ago?
We don't hear it as much as a year ago, but I think that's in part because people have gotten accustomed to some of these higher prices. Food prices have gone down, thankfully. That was really rough last year. Right now, though, we've seen water and sewer increases in Scranton that are unsustainable for a lot of our families. So that is very much on people's minds. At the city, we've tried to do what we can to keep those issues out in front. We've used our rescue plan money to do things like our wage boost program, where we help small businesses increase their wages for their employees to where the market is. So let's say you're paying a factory line worker $14, but that Pennsylvania average is $18. We're going to pay you that $4. We're going to give you that $4 to you for the first year. We're going to split the difference with you the second year. Just need you to guarantee in the third year that you're going to keep that wage at that higher level. So we're trying to do some tailored programming in the city of Scranton to help people meet those costs and help keep our small businesses alive.
We've spoken to your counterparts from Cincinnati to Fort Collins to Allentown, not too far away, I suppose, over the last couple of hours, and asked them, what are the issues that people are talking to you about the most, that you're most concerned with? And there's been a steady theme, housing yes. shortage. Is Scranton any different?
It is absolutely the top issue.
We've got 8% now on a 30-year mortgage, and you don't have enough places to live.
Right, and we're continuing to see our real estate transfer tax go. There's still a lot of people buying in Scranton. Our housing prices are low relative to the rest of the country, which is a double-edged sword, right? It's good for our economy. It's good for our tax revenues. But those people that are selling, I'm not quite sure where they're going. We do have a shortage of houses. We've got, Section 8 lines that are, 800 names long.
Wow.
We have a lot of places to go. Homelessness and housing looks different in Scranton than it might in some of West Coast cities. You might not see it when you drive around, but there's a lot of people living in unsafe housing. They might have a roof over their head, but it might not be a safe place for a family to live.
So is Washington helping with this? Do you look to the governor's office? Then he looks to Washington, and is anyone answering the phone?
Absolutely, and that's what's been so great about working with the Biden administration and the Shapiro administration in Pennsylvania is we have leaders in those offices and staff that understand that we have issues. No one has the silver bullet, but we're working together with HUD, working to figure out what those programs and those grants look like to get to those solutions, build those senior housing complexes, figure out what types of development can work, some scattered site where city properties, if we can get seed funding in there and have private developers come in and either fix up houses or build new ones, get wraparound services in. It's a full court press, but the federal and state governments are actually working with local governments since the Biden administration. That's been really valuable.
When you come from Scranton and you're here in the bubble in Washington, D.C., what part of your reality do we not understand? What's your message? What are you taking people by the shoulders and telling them today?
Well, I lived here for 7 years, so that is helpful, though, because I worked at the Treasury Department during the financial crisis and am now in Scranton. So going federal to local is helpful because I can see what does and doesn't work at the local level, and it's great to be able to take it to Washington and say, I know that your intention with this white paper, this policy, it's right on in terms of what should be, but I need to help walk you through what can actually be, what a city can implement, what a small team can implement, and we work really well, I think, as mayors with the current administration in closing those gaps between the aspirational policy and the on-the-ground implementation.
We're spending time with the mayor of Scranton, Pennsylvania, which you've heard about a few times on this show, the home of course, the President of the United States, Paige Cognetti. You've been to Washington, back to Scranton. Would you come back to Washington?
I love it here. It's a wonderful place, but we're very committed to Scranton. My husband has a small business.
You're supposed to say, I love my job right now.
I love my job. Oh, being mayor is the best job there is.
A lot of people have a real allergy to Washington. You don't.
You can make so much change here, but you have to listen, and that's the point, right? Is you have the ability of the federal government to give out life-changing money to cities and to families and to different programs, but you have to know how to use it, know how to allocate it. So there's very great power to do good in Washington, but you've got to be able to make it realistic.
Well, that's right.
Someday, but
someday.
We'll
okay.
See. We'll
in the
see.
meantime, you never stay more than 2 nights, right? You get out of town.
It's like Vegas, right? You got to go in and out.
I heard something about that. Yes, exactly. It's wonderful to meet you, Paige Cognetti. Thank you for being part of Bloomberg City Lab. Are you dropping business cards for the rest of the day, or what's the plan?
Yeah, we're going to do a little bit more. I had a meeting on the Hill earlier, and we'll do a little bit more of that. Got to lobby for the city and make sure that we get those federal dollars that we're talking about.
Yes, of course, right. Calling up old friends and old favors, maybe. Mayor, it's great to see you. Mayor Cognetti, thanks for being with us.
Thanks for
on
having
Bloomberg
me.
Radio. I'm Joe Matthew in Washington. We've got a few moments left here at Bloomberg City Lab at the Waldorf Astoria. in downtown Washington. And we're going to spend some time coming up next with some final thoughts before we go back to New York for Bloomberg Business Week. Stay with us on the fastest show in politics. I'm Joe Matthew. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. Blackstone profit, it tumbled 12% on interest rates, and a deal slump was also part of the issue. We get more on what's happening from Bloomberg's Ann Cates.
Blackstone is reporting a 12% decline in quarterly profits available to shareholders as it grapples with higher interest rates and the sting of a pullback in deal making. Distributable earnings for the third quarter totaled $1.21 billion, or 94 cents a share, missing the $1 average estimate of analysts surveyed by Bloomberg. That was roughly in line with Blackstone's second quarter profit, which was the lowest in 2 years. The firm oversees more than $1 trillion. It is the first in the coming string of major U.S. alternative asset managers to report third quarter results. Ann Cates, Bloomberg Radio.
Thank you, Ann. And Blackstone shares down more than 8% right now. Citigroup has fired an employee who posted an anti-Semitic comment on her personal social media page. Company investigating. The employee's post was screenshotted on social media website X by the nonpartisan group Stop Anti-Semitism. And billionaire investor Mark Lasry and Golden State Warriors star Steph Curry, well, they're buying a team in the new golf league founded by Tiger Woods and Rory McIlroy. Lasry, of course, a former co-owner of the Bucks, and Curry leading a group of investors buying the 5th team in TGL. It's a 6-team league that's set to begin play in January. And Curry's teammate and former teammate Andre Iguodala also investing in this team. And Lasry says it could be one of the most popular things on television in just 5 years. And those are some of the stories we're following.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Live from Washington with just a few minutes left to share some thoughts from Bloomberg City Week 2023 event in Washington. I'm Joe Matthew. This is Bloomberg Sound On. Thanks for joining. We thought we'd be having a whole different conversation today about Speaker of the House, and we'll have more on that coming up here. It's not going to be Jim Jordan, not today. Republican conference members just emerging from their meeting behind closed doors a short time ago. And Bloomberg's Kaylee Lyons, who's usually on with us at this time, is on the Hill right now, says they have emerged with no plan. We'll keep you posted, but we're likely not going to be going to another round of voting today. As we add the voice now, Stephanie Dockery, who helps to lead the arts program at Bloomberg Philanthropy, is with us here at City Lab. It's wonderful to see you because you're working on some pretty cool stuff today. We saved the best for last on this program.
Thanks for having me.
I hope that's okay that you waited a moment. You're actually announcing a really important initiative today with a project that you've been working on for some time now. Bring us up to date.
Absolutely. I'm Stephanie Dockery at Bloomberg Philanthropies, and I manage our Public Art Challenge, which just announced 8 winning cities this morning. These projects will be going on for a 2-year period, and $1 million will be going to the cities to work.
That's incredible.
Mayors, artists, nonprofits coming together, and they'll be addressing significant civic issues in their communities with temporary public art.
What can you do with $1 million? I'm guessing a lot.
A lot, but the money goes fast, and it helps to scale these projects. We give them technical assistance. They work with small businesses and nonprofits in their communities to talk about climate change and racial equity and homelessness. For example, Houston will be addressing homelessness, and they will be doing 9 installations in their Midtown Arts Corridor.
Amazing. So Houston is one of the 8. Where else are we looking?
Atlanta, Public Health Project, Thriving Together. Baltimore, Inviting Light. 5 light installations in their Station North area. We're working in Honolulu, Wahipana, storied places telling indigenous stories. We're working in, I said, Houston, Orlando on a food insecurity project, Phoenix, Arizona on a shade project, climate change, creating shade installations for other desert cities. It will be hopefully a scalable project. Philadelphia, Healing vs. Germantown, which is a project addressing gun violence.
Wow.
And lastly, Salt Lake City, Wake the Great Salt Lake, which will be addressing the persistent drought of the Salt Lake City Lake, and will be doing installations around the lake and in 7 city council districts.
When will people start seeing this work emerge?
In the next few months. The projects will take place over a 2-year period, and they will all come online at different times, but there's going to be a lot of coalition building, working with residents, of course, working with the city, and working with local nonprofits.
Well, this is something, Stephanie, we're really kind of telling a story about philanthropy stepping in to maybe take the place of arts funding that's gone away. Is that how you see this?
Absolutely. We work in a very unique way. This project emerged when Mayor Mike Bloomberg and our CEO Patty Harris and arts team lead Kate Levin were in the city and did 500 public art projects, and we saw that.
And you saw results.
Public art increases urban creativity and vibrancy, and it brings people together. And so we, of course, work with cities at Bloomberg Philanthropy. So we have scaled this to work with cities around the country. Any city that's over 30,000 residents can apply. We got over 150 applications. And it's great that mayors are seeing arts as a way to address critical issues in their communities.
Well, that's important that you mentioned. We only have a minute left. How do artists get involved and find this money?
Artists are part of the project. They apply with the mayors. And just so everyone knows, the last round had $100 million in economic impact. So when you're thinking about arts, think of them as part of the solution to a lot of critical issues.
Are you making plans with all the mayors around here today? My goodness, they must want a piece of this.
Our Mayor Lemay Lumumba from Jackson is here. Mayor Bynum from Tulsa is here. We did the Greenwood Art Project commemorating Black Wall Street Massacre in the last round in Tulsa. And with Jackson, we did a food equity project with Mayor Lumumba. So huge fan of mayors.
Sounds
huge
like a
fan
big
of
yes
City Love.
on that.
Yes, absolutely.
Well, you're doing great work, Stephanie Dockery. Thank you so much for being with us from Bloomberg Philanthropies and for hosting us here today at Bloomberg City Lab at the Waldorf. It's wonderful to meet you, and thanks for bringing your great work to us on the air.
Thanks for having us, and please stay tuned to see the future of these
You
projects.
said it. I'm Joe Matthew. Bloomberg Business Week starts now.
Really? This was my first live interview. Thank you.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Proceeding carefully. Buy your
Who are you,
shirts
Jay
and
Powell?
hats right now. Exactly. Hey, very good afternoon, everybody. Live from the Bloomberg Interactive Broker Studio on YouTube and Bloomberg Originals. It is a Fed Thursday, a Jay Powell Thursday, October 19th. And yeah, Jay Powell speaking with our own David Westing, talking about proceeding carefully and definitely leaving the door open to another interest rate hike.
Not in November. That seems like
Probably
that
not.
one's probably not. December is where the door is open. Investors are certainly reacting to that. We're seeing markets whipsaw. Also, earnings from Netflix sending Netflix higher, earnings from Tesla sending Tesla lower. We're going to have more on all that in just a moment.
Got to be on your toes, folks, to track the trade today, but we've got it all covered for you. You are going to hear from the Fed chair and that conversation Jay Powell had with our David Weston and the comments that moved the markets and why. And then speaking of the Fed, the price of money, folks.
It's going up, but you know what? It's not because of the U.S. Central Bank. We're going to explain why.
Can't blame the Fed for everything, just like you can't blame media for everything. You can't blame Jay Powell and company.
Carol, sounds like it's personal.
Coming in a little hot. All right, we've also got the details on a poll about the upcoming U.S. presidential election. You heard Joe Matthew talk a little bit about it. It is a most read story, and we want to continue digging deep into this story.
Yeah, we're also going to hear about the longtime media executive who's out with a memoir about her experience coming out as transgender in one of the most high-profile financial institutions in America.
This is pretty cool. And then we're going to get into the millions of Americans. You know who they are. You are probably them. Caught between work and caring for parents. I've been there. It's tough. We're going to get into a great story by our own Matt Bowell.
And Kristen Sudeikis is going to join us today. She's the founder of Forward Space. Her name sounds familiar.
Yeah, it should. She's got you know her brother.
Oh, that's
Ted
why.
Lasso,
Okay.
anybody? But
Yeah.
anyway, she is doing something really cool. When you think about the fitness and wellness space, there's so much going on and so much going on since the pandemic. She's got her own thing going on in downtown New York.
Are we going to be dancing?
We might be.
Okay.
She's been doing it for 5 years. They're coming up on their 5-year anniversary. So we're going to talk about expansion, working with Oprah, all that good stuff.
Cool. I'm excited for that one.
Having said that, folks, we got a lot to talk about in the markets. An interesting day. We are in the beginning of earnings season. Some big numbers have already crossed, but man, we continue to just track moment by moment what we are seeing in yields. We talked about it yesterday. It's like 5% across the board. Some folks even talking 6%.
Yeah, equities are taking a hit right now too. S&P down 0.7%. We're seeing 0.8% decline on the Nasdaq.
All right, don't go anywhere because we're heading over to our TV colleagues Romaine and Katie. We're going to break down the markets. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick alongside Katie Greifeld. Joined right now by our colleagues Carol Masser and Tim Stenevec. Welcome to our audiences across all of our Bloomberg platforms, television, radio, as well as those folks streaming us on YouTube. Here, a down day for stocks here, a mixed bag in the Treasury space. And just a few minutes ago, we had a chance to catch up with David Weston, who had a chance to sit down earlier today, Carol, with Jerome Powell, the Fed chair.
It's all about Jay Powell. What a great conversation that David Weston had with the Fed chair. And having said that, markets reacted tick by tick, it feels like, to what Jay Powell initially some enthusiasm, maybe some calmness, if you will. And then you saw equities really move to some of their lows of this session and yields once again kind of staying persistently higher, if you will, especially on that 10-year. What did Jay Powell say? Basically, he said policy isn't too tight, risk still high on inflation, just still too high. And he talked about those data points. If they continue to come out, it's going to be tricky to really pull the Fed back from continuing to raise rates, or at least prevent them from cutting rates anytime soon.
Yeah, pretty much also took a rate hike off the table for November. December is what everybody's focused on. I thought Romain had really interesting comments about the labor market, saying that we have a very resilient economy on our hands and saying that the labor market is actually gradually cooling, though we have gotten a substantial amount of labor supply this year with people coming off the sidelines and going back to work.
Yeah, and he talked about this idea too, how that data dependence, which he's still standing by, but he also made it clear here that there is a little bit more art to what's going on now than science when it comes to this phase of the rate tightening cycle and trying to determine what to do next.
And maybe rates are, doing the Fed's job for him.
Well, he acknowledged that. I mean, he basically said, David asked him that, and we've heard this from a couple other Fed members, but I don't know, does that mean they can just sit back and say, oh, okay, let the bond market do it?
They could at least take a breath, right, Katie?
Perhaps they could. What I really want to know is when do we go from tightening financial conditions, yields doing the Fed's work for them, into maybe a moment of financial instability, or at least that fear entering the market. But let's talk about another big fear in the market for some of these food companies. We're talking about Ozempic, and one of the pieces on the terminal that caught my eye was Nestle.
Was Powell asked about this?
No,
How do you
and I wish we had.
A good transition, though, Katie. I will say.
I tried my best.
I will say.
Yeah, maybe. And in any case, I do want to talk about this because Nestle's CEO said that the company is actually, they're not too worried